Okay, so let us start now. Good morning, good afternoon, depending on where you are. My name is Emmanuelle Gahn. I'm Senior Analyst at the World Trade Organization, and I will be your host during this event. So today's event is the second edition of the Global Trade and Blockchain Forum, but the third event organized by the WTO to further explore how blockchain and distributed ledger technology can shape international trade and the role that governments can play to unlock the potential of this technology. Before giving the floor to our distinguished speakers, I would like to thank our WTO interpreters who provide us today with real-time interpretation in French, English, and Spanish. So if you want to listen to interpretation, you can click on the globe symbol, which is at the bottom of your screen. I also would like to thank our technical team who can help you address any technical issue you may have during the event. Now, please note that this event is recorded and that it is live streamed. The recording and the speakers' presentations will be uploaded on the WTO webpage of the event after today's session. Now, without further ado, I would like to welcome our three distinguished speakers for this opening session. First, Mr. Zhao Zhongyi, who is Deputy Director General of the WTO, Mr. John Denton, who is Secretary General of the International Chamber of Commerce, and Mr. Liu Chuan-Hong, who is CEO of Infocom Media Development Authority of Singapore. So without further ado, over to you, DDG.
Thank you very much, Emmanuelle. Ambassadors, distinguished guests, ladies and gentlemen, good morning. It is my great pleasure to welcome you to the second edition of the WTO Global Trade and Blockchain Forum. Let me begin by thanking our Economic Research and Statistics Division for having put this event all together. A lot has happened since the first forum we held in December 2019. The COVID-19 pandemic has shaken the world, causing massive supply chain disruptions and threatening the lives and the livelihood of millions of people. It has supply chain inefficiencies and the record seizures of faulty and counterfeit masks and other personal protective equipment in the US, Australia, and other places have highlighted the vulnerability of the medical device supply chain and the need for greater integrity and provenance of medical supplies and other critical products. The pandemic has also brought to the fore that archaism of trade processes still largely based on paper, with dire consequences on business operations in times of lockdown. It has brought into sharp focus the need to urgently digitalize these outdated paper-based processes. The last 12 months have shown that going digital is no longer optional. It is a matter of survival for many companies, in particular the smallest ones, who have been hit very hard by the current crisis. So how can we bring trade digitalization to its next level? In spite of all the efforts made over the last decades, the adoption of electronic bills of lading, which is a key document in international trade remains ridiculously low at 0.1%. How can we accelerate trade digitalization to build back better? Can advanced technologies, in particular, distributed ledger technology, commonly referred to as blockchain, help to address the risks and inefficiencies in global supply chains and strengthen trade resilience? Today's event will dive into these issues. It will explore how technology, in particular, distributed ledger technology, can be leveraged to enhance transparency and efficiency of supply chains and trade processes. It will discuss the latest blockchain developments in trade and trade finance, and how trade digitalization can be accelerated to the benefit of all developed and developing economies, large and small companies. It will also provide an opportunity to explore the importance of digital identity for trade digitalization, a topic that is starting to emerge, although still timidly, in trade discussions. But we all know that technology is only a tool, that trade digitalization cannot happen in a regulatory vacuum. Today's final session will discuss the role that governments and international organizations can play to support the development of a regulatory and a policy framework conducive to trade digitalization and to the deployment of distributed ledger technology. I'm delighted that we have with us today two keynote speakers who will share their vision of blockchain for trade. First, Mr. John Denton, Secretary General of the International Chamber of Commerce. The ICC has been pushing the trade digitalization agenda very actively and recently launched a new initiative, the ICC Digital Standards Initiative, which aims at addressing the digital island problem, the fact that many of the projects that are being developed follow a siloed and disconnected approach, leading to fragmentation between systems and the networks that prevents end-to-end trade digitalization. I would like to thank the ICC for having extended invitation to the WTO to participate in the governing board of this initiative to advance trade digitalization work at a practical level in a public-private cooperation spirit. Having all stakeholders involved in this work is critical. Our second keynote speaker is Mr. Chung Chuen Hong, who is CEO of Infocom Media Development Authority of Singapore. Singapore has been spearheading work on blockchain for trade. Mr. Liu Chuen Hong will share with us some of the initiatives they have been working on to promote trade digitalization. We are also launching today a new publication with the International Chamber of Commerce and the Trade Finance Global, entitled Accelerating Trade Digitalization to Support MISME Financing. The publication explores how digital technologies such as blockchain, but also big data analytics, artificial intelligence, the Internet of Things, cloud computing, optical recognition character, and application programming interfaces can facilitate MISME's access to finance. We are all acutely aware of the challenges that MISMEs face in accessing financing. The MISME financing gap is a reality that cannot be ignored and that needs to be tackled with determination if we wish to ensure that small players are given a chance to thrive. Indeed, for many micro, small, and medium-sized enterprises around the world today, access to financing can mean the difference between prosperity and bankruptcy. Based on survey of 105 practitioners in the field and more than 30 qualitative interviews, this publication aims to shed light on the opportunities that technology opens to make MIS access to finance, including more accessible. It discusses the challenges standing on the path to adoption and outlines a multi-pronged approach to unleash the potential of digital technologies to facilitate MIS financing. We are also announcing today the launch of an online introduction course on blockchain for trade, developed jointly with the International Trade Center. I would like to extend my sincere thanks to the ITC team for their support and help in producing this course. The course, which will be officially launched in the coming weeks, appeals to technical and non-technical audience alike and will be freely accessible through both the ITC SME Trade Academy and the WTO e-learning platforms. The lectures have a particular MIS focus. They examine the opportunities that blockchain technology may create for small producers and enterprises, especially those located in developing countries. Session 3 of today's forum will give you the opportunity to learn more about the content of this course and how you can register to take it. I hope that today's discussion will provide useful insights and food for thought on the issue of trade digitalization, and that ideas that emerge will help guide members' thinking and actions going forward. We have a fantastic set of speakers with us, so I have no doubt that it will be a very productive event. Enjoy your discussions. Thank you for listening.
Thank you very much, DG, for your opening remarks. Now let me turn to John Denton for the first keynote. John, the floor is yours.
Thank you very much, Emmanuel, and it's a pleasure and an honour to follow DG. We shout out and thank you very much for the kind words you've said about the International Chamber of Commerce. And as you know, we have an abiding interest in the success of the WTO, so working with you is a real pleasure. As many of you will know, ICC is the institutional representative of more than 45 million businesses in over 100 countries in the North and the South and the developed and developing world. We are a purpose-led institution with a mission to make business work for everyone, every day, everywhere. That mission has arguably never been as vital in the face of COVID-19 since our founding over a century ago in the aftermath of the First World War and in the midst of the Spanish flu. As we have said repeatedly, business solutions are essential to progressively ending the pandemic. The key challenge is to make those tools, tests, treatments, vaccines, and other technologies readily available to everyone, everywhere, every day. Our consistent message is that only global action in partnership with the global private sector will be effective in lifting the grip of the novel coronavirus over lives and livelihoods throughout the world. Related to that, and speaking directly to the theme of today's discussion, we at ICC have also been clear that the response to the pandemic and any future rebuild must leverage digital technologies for the benefit of all. Friends, when the COVID-19 pandemic hit, we strongly condemned the escalation of protectionist trade measures, which actually impeded access to secure essential goods and medical equipment throughout the world. The closures of national borders, the impositions of tariffs, and the introduction of export controls have hindered, and my friends continue to hinder, efforts to mitigate the human economic effects of the pandemic. Faced with the proliferation of my country first approaches, ICC did what it has always done in times of global crisis and under my leadership. we decided to challenge convention and to act. And in doing so, we adopted a digital-first approach. Most notably, we decided to advocate a risk management approach to restarting global mobility and to develop a solution to safely restore global mobility in the wake of the COVID-19 pandemic. We developed a digital tool, ICC AOK Pass, a risk mitigation tool that allows users to safely present digitally authenticated and secure COVID-19 test results or vaccination records to border authorities with a simple QR code scan. ICC AOK Pass is backed by blockchain technology. ICC AOK Pass does not collect personal or medical data and is a much more efficient and reliable alternative to the collection of paper-based documentation at ports of departure. So far, we have conducted multiple pilots and we have implemented them around the world, providing recognition for recognized test results and vaccines and restarting global mobility. The participants include leading airlines, governments, and private sector partners. And right now, we're right in the middle of conducting a month-long pilot with Air France on all flights from Charles de Gaulle Airport in Paris to San Francisco and Los Angeles. We've already conducted successful pilots with Alitalia, Air Carib, French Bee, Etihad, Sanofi, and now the Singapore Immigration Authority. And we are piloting right now this approach and opening a safe economic ecosystem in the city of Girona in Spain. And if it works, we'll be able to scale that throughout Spain. So watch this space for more. Friends, by standardizing health and technology protocols, we believe that ICC AOK Pass can safely reopen local economies, providing much needed relief for SMEs without waiting for the rollout of vaccines. If leading virologists are correct that COVID-19 may be with us for many years to come, more digitally enabled solutions will be needed to create safe spaces for economic activity to resume. The global economy cannot be simply put on ice indefinitely. And why prolong the human and economic pain of doing so when technologies exist that can be readily deployed to restart and restore cross-border economic activity while guarding against the unfettered spread of the virus? This takes me to the broader point. The role of digital technologies in enabling a trade-led rebound from the COVID-19 crisis. We have all spoken for years about the potential for digital platforms and blockchain solutions to democratize access to the global trading system. With struggling SMEs desperately needing new sources of demand, it is high time to finally deliver on that promise if we are to deliver a truly resilient and durable recovery in the years ahead. Governments must lead from the front in this regard. And on many of the issues up for discussion in today's event, antiquated policy frameworks too often hold back adoption of digital trade solutions, forcing reliance on cumbersome and costly paper-based processes. By way of example, while US e-commerce saw user growth of around 40%, that's right, 40% last year as a result of social distancing and lockdown measures, more than 99% of key trade documents, such as bills of lading, remain in paper format. In short, global trade seems to be the one area of the economy immune to the rapid digitalization affected by the pandemic. This is one type of immunity that we cannot afford to have as lasting, which is why we are calling on all governments to adopt laws to give full legal effect to electronic trade documents, most fundamentally by adopting the UNCITRAL model law on electronic transferable records, following the lead already of Bahrain and Singapore, and I shout out to IMDA here. Business also needs to get its own house in order. The existing digital trade platform market is simply not delivering for SMEs and the real economy. Adoption of digital trade platforms and e-documents are held back today by excessive complexity and fragmentation, which for SMEs ultimately means one thing: undue costs. That's why last September we stepped in and launched the ICC Digital Trade Standards Initiative that DGE just mentioned, to leverage our convening power and standard setting experience to accelerate the adoption of common industry standards for digital trade documents, processes and platforms. We are rapidly moving to identify and, where needed, establish new standards and rules working openly with businesses of all shapes and sizes across the trading ecosystem. And I shout out to Oz, who'll be speaking later, our MD of DSI. If you're not involved in this initiative already, we'd encourage you to reach out to us to explore how your company can best engage. We've also been delighted to receive the strong support from the Asian Development Bank, the Government of Singapore, and most recently, the WTO, making the Digital Standards Initiative the definitive global effort to enable the industry harmonization needed to finally accelerate trade digitalization. We believe that policy reforms and industry standards will have a transformational effect in finally shedding the reliance of world trade on paper documents. We are taking trade from analog to digital, but awareness of and access to solutions also needs to be broadened in the fallout from COVID-19. The particular issue I want to focus on now is access to trade finance, because it's a prime example of this challenge. Today, over 45% of SMEs see their requests for trade finance rejected and often struggle to find alternative sources of funding. Without adequate access to capital, SMEs are effectively cut away from international markets and unable to grow their operations to meet international demand. This is not a situation we at ICC can allow to perpetuate in the aftermath of COVID-19. SMEs emerging from the greatest demand shock in history with weak balance sheets will need access to new markets and adequate finance if we are to avert a downwards economic cycle reminiscent of the 1930s. The importance of this agenda cannot be understated. Crucially, blockchain and DLT are offering new prospects for SMEs in trade finance. Indeed, the digitization of trade finance and technology solutions offer new opportunities for banks and non-bank financiers to serve SMEs profitably. And this has changed the way we approach the trade finance gap. Events like today help highlight the potential of these technologies and help us inspire us to solve the most complex challenges in trade finance. We simply need to do more to build SME awareness of the new financing channels available to them, and wherever possible, expand access, particularly in emerging markets. So to respond to this challenge, in April, ICC will launch a platform which will be called ICC Trade Now. ICC Trade Now will be a dedicated online platform that will connect SMEs to innovative trade finance solutions. ICC Trade Now will help scale up and leverage game-changing products and services through tailored partnerships with cutting-edge solution providers. Our objective is to ensure that SMEs can harness the immense transformational power of digital technologies and access trade finance solutions that will help them seize new business opportunities. ICC is acting, and today I'm excited to announce our newest partnership with Tradeflow Capital Management, one of our founding partners under the ICC Trade Now campaign. ICC Tradeflow's innovative non-lending and non-credit-based instruments will provide SMEs with the right financial support to execute import-export trades in bulk commodities. We are confident that our partnership with ICC Tradeflow Capital, as well as other partnerships soon to be announced under the ICC Trade Now campaign, will actually create new tangible opportunities for SMEs worldwide. Friends, as we look to the post-COVID world, it has become increasingly clear that digital technologies will play a key role in rebuilding the global economy and in creating renewed economic opportunity for all. ICC looks forward to working with the World Trade Organization and with others to ensure that businesses of all sizes are able to reduce costs and maximize the benefits of the digital economy. We make business work for everyone, every day, and everywhere. Thank you for the opportunity to address you today.
Thank you very much, John. And let me now offer the floor to Yu Chen Hong for the second keynote. You have the floor.
Thank you very much, Emmanuel, and Deputy Director General Yi, as well as Mr. Denton, distinguished guests, ladies and gentlemen. Very good morning, and thank you for inviting me to the 2021 Global Trade and Blockchain Forum. It's an extremely important topic, and I am very happy to join you to share Singapore's perspective on trade digitalization and some of our efforts on this front. I think a key issue on everyone's mind must be how we can all emerge stronger from COVID-19. I think the pandemic has caused unprecedented disruption to global economy and world trade. Deputy Director General Yi mentioned that just now. And I think the WTO forecasted that the world merchandise trade volumes would fall by 9.2% in 2020. Singapore too, as a very open trading economy, has also been affected, with our total merchandise trade falling by more than 5%. So the pandemic has definitely underscored the importance of digitalization for ensuring business continuity and, of course, speeding up trade recovery. To increase the level of digitalization, however, needs both the governments and businesses to move in concert. The 2014 report by the UN Economic and Social Commission, for example, estimates that just direct cost savings from cross-border paperless trade, just doing paperless, could be up to $7 billion annually. So I think for governments, what we can do is to align and to help harmonize many of these rules and standards, and perhaps in three very important areas. Firstly, harmonized policies. I think Singapore has been a very strong supporter of the work at the WTO, especially on the Joint Statement Initiative on e-commerce, of which Singapore is a co-convener. This is an extremely important initiative that helps to establish international rules, sets the benchmarks, and aligns standards that will enable as well as enhance digital trade. I think modern WTO digital trade rules that address core needs will create that open and predictable environment for businesses to flourish. We're also very heartened to see strong international interest in the JSI, with 86 WTO members participating actively, and this collectively represents more than 90% of global trade and represents all major geographical regions and countries at all levels of economic development. Secondly, harmonized legal frameworks. I think in our discussion, Singapore pushes for greater awareness and adoption of global standards, such as the UN Commission on International Trade Law texts, to facilitate that cross-border e-commerce. I think recently, just last month, we adopted the Model Law on Electronic Transferable Records, or MLETR, into its Electronic Transactions Act. I think this brings the total number of jurisdictions to 3, and it is our hope that a lot more will join us on this journey. The third area would be the alignment to open technology standards. I think this is where we can coordinate with industry to actively contribute at standards organizations such as the UN Center for E-Business and Trade Facilitation and the International Standards Organization. For example, at the UN CFACT, we have the honor of leading a project looking into how technologies can be used to accomplish transfers of title that are compliant to the MLETR requirements. Another partner in our efforts is, of course, the International Chamber of Commerce through their Digital Standards Initiative. I think this close collaboration can be traced back to the MOI, which we signed on the sidelines of the 2020 WEF at Davos, together with 17 other industry luminaries spanning banking, logistics, insurance, as well as trading sectors. We all know that international trade can be staggeringly complex and fragmented because there are just so many different actors. And a single transaction can involve multiple parties in different countries. So therefore, it is very important that the government lean forward to help pull these 3 key areas that I mentioned so that these things do not function purely in silos. But this is sort of the today. Looking forward, let's now explore the core idea of how blockchain as a technology can really support trade digitalization. I think with blockchain, the possibility of immutability on a single source of truth can allow and to bring together siloed transactions in an interconnected ecosystem. I think that's why in the Blockchain and DLT in Trade publication by the WTO, we saw quite a number of blockchain projects, of which Singapore's Trade Trust is one of them. So how does Trade Trust aim to support trade digitalization? Trade Trust is designed to digitalize 2 types of documents: transferable documents and instruments like the bills of lading, as well as other normal documents. And we built it to be freely accessible to all, designed to help the industry platforms and systems interoperate seamlessly. It is open source and it is released as open source. And in some ways, it's our small contribution to that global capacity building. And for the global trade and technology communities, that means taking a lot of the hard work out of integrating that into the myriad of blockchains out there. And trade trust is ready for use today. I think responding to our open invitation to use trade trust and its software components, numerous industry players are already using it. SWIFT, as the world's foremost banking network, is exploring how their multiple products, including the APIs at the core of financing, can plug into these components for their bank members. I think platform players like DLT ledgers and Trumiz are using these components in their solutions to work with digital transferable instruments like bill rating. Industry players, for example, our Pacific International Lines and our banking sector like the DBS Bank, are actively exploring its use to do the same. And we're also exploring trade trust to use it between governments for trade administration documents. At the World Customs Organization Asia Pacific Regional Workshop a few weeks ago, my agency, the Infocom and Media Development Authority, IMDA, did a joint presentation with Australia on how we're working together to explore trade administration documents such as certificates of origin can be digitally verifiable via trade trust. And we shared that a 3-week-long trial last December garnered extremely positive response from everyone involved. I mentioned that we're also using trade trust for commercial documents. For some time now, we've been collaborating with companies in Singapore to bring them onto projects with cities, for example, Shenzhen, as part of our Shenzhen Smart City Collaboration Initiative, as well as the Land Sea Trade Corridor. And for example, with the Netherlands, engagement involving the Port of Rotterdam and the Dutch Blockchain Coalition. I think in these projects, we work with businesses to use blockchain to conduct transactions so that they can experience firsthand what that paperless future will look like. So in IMDA, we sort of view ourselves as what we call the architects of Singapore's digital economy. And therefore, we are continually trying to push the boundary for how to use things like blockchain beyond today's purely financial realm. And we aim to catalyze that through also investing in research. For example, with the recent launch of our Singapore Blockchain Innovation Program to strengthen research capabilities in Singapore, in various industries. And I think there's a lot to be gained from that translation of blockchain to trade, logistics, and supply chain. I think one of these areas, for example, is decentralized identities, which is an important framework to verify the integrity of an individual or organization's digital identity. I think these are just some of our investments in blockchain innovation that I think demonstrates the potential as well as the commitment to ensuring that the world is much more digitally connected. So I think in conclusion, while trade and economic landscape as it stands today remains challenging, I think all of us are looking beyond the pandemic so as to emerge stronger, both as governments as well as businesses. And I think the move for trade digitalization is a key pillar. We must try and harmonize our policies, harmonize the legal frameworks, alignment to an open technology standard. I think these form the basic foundations for ubiquitous digitalization. And I think with open and neutral frameworks like trade trust, open source, open to everybody, and partnerships of all parts of the trade and technology ecosystem, I think we have a chance to influence the trajectory of digitalization and lay the groundwork for that future upturn and for the world to emerge stronger. Thank you very much.
Thank you very much. Thank you very much, John, and you for your very valuable and interesting insights into the work being done by the ICC in Singapore to promote trade digitalization. And a big thank you to DDGE for your continuous and precious support in pushing these issues at the WTO. Now, today's event will give us an opportunity to dig deeper into the various issues you touched upon in your keynotes, the trade digitalization, digital identity, regulatory framework, etc. So thank you very much for having set the scene for today's discussions. This is much appreciated. And I hope it will help guide our discussions today to explore what more can be done to promote trade digitalization and make it a reality in a not too distant future. So our first panel discussion will start in a couple of minutes to give enough time to speakers to come on board. So please don't leave us. And in the meantime, please join us for a virtual round of applause to thank our distinguished speakers. So thank you. Thank you very much. So we'll now move to the panel discussion. Thanks. So can I invite the speakers of the first panel to turn on their camera?
I'm unable to do that.
This is Atul speaking.
Yep.
Okay, you don't have your camera? It doesn't work?
It's disabled.
Okay, so let me check that. Okay, so while the technical team is looking into it, let us start because we're 2 minutes behind schedule. And I know that there's a lot to be discussed. So welcome to our first panel discussion, which is entitled Trading in a Pandemic, Trade Digitalization, a must-have still to be fully realized. So this first panel brings together a great mix of perspectives to discuss the issue of trade digitalization and the status of DLT projects in trade. And Michelle Chivunga will moderate the discussion. Michelle is a globally recognized blockchain professional. She is the founder and CEO of the Global Policy House and a senior advisor to several governments, including the government of Bermuda and the African Union. And she's been recognized as top 10 women in blockchain in Africa and one of the top 40 global FinTech for Good fellows linked with the UN. So over to you, Michelle.
Fantastic. Thank you so much, Emmanuel. And really fascinating listening to all the speakers so far. Firstly, I really want to take the opportunity to thank the WTO for hosting us today. Good morning, good afternoon, greetings to everybody around the world. It is absolutely fascinating to join you this morning. As we following through the discussions that have been had so far in terms of painting the picture of what's happening across the world, it makes me kind of think back to 2019 when we held the first blockchain forum with yourself, Emmanuel, in the WTO, and what a time. And certainly things have really moved on and transitioned since then. Of course, we've heard about the impacts that COVID has had, across the world, and the fallouts of COVID, I think, will continue to hit many economies around the world as we progress. And it is really important that even though we're seeing signs of recovery, that there's still quite a lot of work that needs to be done. And certainly, just giving a very quick overview of what's been happening around the world, from our work and our experiences at the Global Policy House, certainly we're seeing a lot of economies fighting back and really fighting back using, digital tools to do that. Of course, we're living in a what I call a VUCA environment, very volatile, very complex, very uncertain. And with that uncertainty, comes a lot of complexity. That is making a lot of countries, think again about how they do things. It's no longer business as usual, and the norm of doing things has really changed. I think with the introduction of with the implementation of digital tools and the unraveling of the digital economy. Now, in terms of building back better and looking at capacity building as a whole, it is very important, I think, as we move forward to really contextualize and understand, from the lessons that we've learned with COVID. At the surface of it, of course, there's a huge amount of innovation and digital transformation that has been shown. And it's really important as we move forward that we don't just think about it in the context of we've got all these wonderful digital tools, but actually understanding that, economies, we have a number of people, for example, 50% of population has access to the internet, yet another 50% of people do not have access to the internet. So we cannot leave people behind. At the Global Policy House, we're really, really passionate about trying to close that digital divide and ensuring that we can tackle issues around things like digital literacy, and that digital divide I talked about. So I think there's no better time. I think trade, in trade, we've always known what the challenges are. I think trade really needs that injection of trust and greater transparency, visibility, and collaboration, across the trading system. And it is important as we move forward towards recovery, as we start thinking about building back better, that we really start to work more collaboratively across the world, be it around things like vaccines, making sure that, this is about, equitable vaccines that everybody has access to, really tapping on the innovations that are coming to fore. And we've seen this across the economies during COVID. Many countries with robust infrastructure systems, good investment strategies, and good national ID systems have been able to mitigate against the crisis and are really moving ahead to try and solve those challenges. So in summary, I think boosting digitalization is absolutely an absolute yes. And it's something that is already happening. It's something that, many players in our industry, especially in the blockchain space, there's a lot that is happening. I mean, having been in the blockchain space for, since around 2010, I can see the transition, I can see the growth, I can see the movement, but it's absolutely fundamental that we start to scale these solutions and we start to direct investment to the right areas. And with that quick summary, I think the time for trade is absolutely now. We know what the challenges are, be it around access to finance, as it has already been pointed out by the extinguished speakers earlier on. And I think it's about time that within trade, because trade is what really moves everything around the world. Trade is that avenue to create wealth for everybody around the world. It is important that we start to invest in trade and we start to innovate within trade and really bring trade into the 21st century. Looking at those laws and looking at harmonizing the laws and really trying to get everybody together. So I think, the time for trade is absolutely now. I'm very, very excited by the panel that I have joining us today. You've got a phenomenal lineup of people. And what I'll do is just briefly just introduce each one of the panel members. And then we'll drive straight into it and start to explore what these digital emerging solutions are. That we can use and have been used already to tackle some of the challenges around COVID. And just to welcome my panel, I mean, I was fascinated there, when I was introduced to the panel as we're doing our chats, because of the diversity, to begin with, that diversity of people who are here, but that diversity of thought and creativity within the blockchain space is very, very exciting. And so just to introduce my panel before I bring everybody on, Netta Corinne, for example, is the founder and co-founder of Hexa and Orbs. Netta's group is Israel's one of the largest blockchain infrastructure company, and they've been doing some phenomenal work around blockchain. You soon hear about it. Then, of course, we've got James Zoe, who is from Louis Diffuse, and again, they're very well known for the work they've been doing, especially around the commodity and agribusiness space. Again, you hear much more from colleagues there. And from Louis there. Abba Schubert, again, the CEO of Dara, very exciting, and she has some insights around, what they've been doing around things like data, and really excited to introduce her. And of course, we've got Atu Patel. Atu is from DLT Ledgers and has been very active within the sort of just globally around looking at, cross-border trade and then trade and supply chain digitization as a whole. So very excited to hear from him and the work they've been doing around the world. And last but certainly not least, I think most people in the trade circles do know Deepesh Patel, who is the editorial director, for Trade Finance Global. Really fascinating panel. Please welcome them all. It's great to have everybody here. Just to kick off, ladies and gentlemen, I mean, we have faced, significant challenge, right? COVID has been brutal, I think is the best way to put it. And one of the areas that every economy, I think, is worrying about right now is actually when you're looking at, for example, the COVID vaccination, strategy and process and how that's going to evolve. I'll bring in Netta first. Netta, please, if you could just give us some insight into the work that you have been doing. What are the opportunities for blockchain to play a part, especially around things like the vaccine rollout and the distribution around vaccines? Netta, please, over to you.
Michelle, thank you very much. It's great to be here. A little bit of background on Orbs before I start my presentation. It's a public blockchain infrastructure designed for enterprise and large consumer applications. We're open and permissionless, and we use the proof of stake consensus. Now, my focus on ORBS is social impact projects. To that end, I established the Hexa Foundation as a nonprofit that aims to use our technology to further potential social impact use cases. And if we think about it, the COVID vaccine supply chain use case is a great use case, because this is really the first time on a global level we have incentive for a transparent supply chain, right? Every country wants to enable proper vaccine distribution to their population in order to prevent further deaths or economic damage. Now, if we take a look at the slide that I have up, this is a visualization of how supply chain is structured today. And the main problem with existing supply chains is that each manufacturer deploys its own separate solution. You can see that participants along the chain who wish to work with that manufacturer must integrate their platforms to the manufacturer's ones. Needless to say that no two manufacturers use the same platform, meaning that each distributor or hospital need to duplicate the process with every new agent that they work with. And this increases the overall complexity of the entire system. So the other issue is that you can see there's no room here for oversight by authorities. It's not possible to connect to every single system and receive visibility. So if I could have the next slide, please. Next slide, please. There we go. Okay, great. So let's talk a little bit about the pain points that we're trying to solve, right? It's only been a few months since the COVID vaccines have been available on the market. We can see there are a plethora of mishaps and issues. The US government was trying to manually track 20 million vaccines that it sent to states. Scammers are attempting to sell fake vaccines, and we can even find entries for vaccines being bought and sold online. Now, we all know that with more time, nefarious actors will be more sophisticated and will try and profit from supply chain systems that just don't work well. In China, for example, this past month, local police arrested 80 people involved in a network of fake vaccines and seized 3,000 counterfeit vials. So if I could have the next slide, please. Thank you. All right, let's talk about how blockchain can add value. As you can see, the blockchain provides a highway of information. Everyone connects to it. It is one single infrastructure that allows everyone on it to be connected in some way to everyone else. All relevant authorities can see this data, which in normal supply chains, as you saw, that just cannot happen. Now, let's assume that every box of vaccine leaving the manufacturer has a unique QR code for scanning. And these codes also have the ability to determine temperature. So you can actually track the vaccine and its validity down to the very last vial, from the manufacturer to the person receiving the injection. And also importantly, regulators now have access to this data. They can get a holistic view of what regions or states are effectively functioning or where there's a problem. For instance, let's say vaccines weren't handled properly, they weren't stored at the correct temperature, or if goods were lost, fell off a truck, and were replaced by counterfeit products. Now regulators can see where this happened. Blockchain actually shifts the scale on so many supply chain related issues. Counterfeit identification, gray market imports, stolen good prevention, all of these aspects are very important when it comes to COVID vaccines. But there are also other added value propositions for blockchain that can improve efficiency in all industries and not just in COVID vaccines. Right now, for example, it's pretty well known that a significant amount of medical supplies delivered to hospitals are never used simply because the hospital loses track of them. In my conversations with a large medical device manufacturer, they admitted that they know that only 40% of their goods actually make it to the ER. Now, in this day and age, there's really no reason for this kind of waste. I think the corona pandemic wreaked havoc into our world, but perhaps it will also inspire us to become more efficient and more transparent on a global level. This is a time to prepare for the next pandemic. It will probably come. Let's hope that when it does, on a global level, we know how to deal with it. Thank you, Michelle.
Fantastic, Netta. Really excellent overview, and we can see the kind of shifts when you start to introduce blockchain across the supply chain. So very, very helpful there. And certainly, I think there's quite a few companies, right, that are starting to explore, especially specifically around, the distribution of vaccines and how we can utilize technologies like blockchain, and even not just blockchain, but when you're starting to think about IoT devices that can be used, and that combination, convergence of those technologies and managing, be it temperature controls or whatever it is, to ensure those vaccines are kept in the right place. So thanks very much for that. We will be, taking questions later on, ladies and gentlemen. So please feel free to put them in the chat as we go along. I will just transition to my next speaker, and then we will take questions later on. So please do keep them coming. I can see loads around data, loads around supply chain visibility there. But just to bring in, and Netta, thanks very much, and we'll come back to you for some questions. But just to bring in James now, James, I know you've been, very heavily involved in really ensuring that, that supply chain is flowing, right, through your sort of commodity activities, through your agribusiness, supporting things like food security, which is absolutely critical. I'd love for you to just give us a little bit more input into what you've been doing, what your experiences are. Have you had any major challenges during the pandemic? How have you gone about it? Have you utilized blockchain? What are you seeing in terms of progress around that space, please?
Thank you very much, Michelle. Hello, everyone. It's a great opportunity for me to share the user's case. So in the words probably as Michelle defined. But first of all, let me give a brief introduction about Louis Dreyfus Company and our background, our relevance to blockchain, our experience, and then the challenges we have been facing, especially during the pandemic era. So Louis Dreyfus Company is a leading global merchant and processor of agriculture products. Founded in 1851, we have grown and developed over the last 170 years to span the full value chain across many different product lines, including 8 platforms. They are grains and oilseeds, sugar, coffee, cotton, rice, freight, juice, and global markets. We are actively operating in more than 100 countries. By leveraging our global reach and extensive asset network, we serve the customers and consumers around the world. And we are always making every endeavor to deliver the right products to the right location at the right time, safely, reliably, and responsibly. And every year we originate, process, and transport about 80 million metric tons of agriculture products around the world. So during COVID-19, based on our own experience, we have seen the pandemic posed both logistics as well as operational challenges across the full supply chain. And this environment underlined the importance of utilizing technology for the resilience of the global trade flow, and the key role for ensuring business and supply chain continuity. In fact, the crisis has also accelerated the existing trend of digitalizations. And in this context, Louis Dreyfus Company, we have been able to leverage our global operation network, risk management, expertise, and market understanding to keep the essential food and feed supply chains moving, while we continue to invest in essential data science and analytical capabilities, which includes blockchain, artificial intelligence, robotic process automation, in order to drive efficiency, security, collaboration, and sustainability. As Louis Dreyfus Company, we are the first in the industry to pilot by utilizing the blockchain platform to a soybean shipment, which we did with the Chinese customers. The shipment was from the United States, to work with the partners to utilize the platform, which was a very successful demonstration that how we can use the technology to support the trade by improving efficiency, to ensure the transparency as well as the authenticity of the trade flows, to increase the speed, and also to make sure the integrity of the trades. And we also have piloted blockchain with our juice business by working with a Dutch supermarket so that we can provide all the data to the blockchain platform so that the consumers will be able to get all the insights, all the information along the full value chain. So this is another good example. So the pilot of the soybean trade flows was the base for the start of a joint initiative with the industrial peers to modernize the agri-commodity trade operation, the whole industry-wide, by utilizing blockchain technology to connect the major players along the value chain, the shippers, traders, and charterers. And we believe over time, this can expand to cover and include almost all the players from the farmers to the consumers. So after 2 years cooperation of work and the new blockchain platform launched in February this year as Covantis SNA, our primary scope covers the export of bulk commodities such as corn and soybeans from Brazil to global destinations, with hundreds of users from over 30 entities around the world. And all of us, including Louis Dreyfus Company, have been trained to utilize the platform. So in the coming months, Covantis SNA will work to enlarge the network by onboarding more participants and more industry players, and so that all of the participants along the value chain will have the opportunities. And looking further ahead, our company will continue to invest in the new capabilities that increase the value for our clients, for our partners from origin to destinations, creating global network for efficient execution of bulk commodities, especially the food, feed, clothing-related commodities trade operations. So based on our experience, we believe that there will be really opportunities to help us. Maybe I can park later on. We can talk more along how we have improved efficiency, the transparency, ensure the data security, and drive the authenticity of the trades, and also help the world to ensure a fair global supply chain of the food products, which I think is important for the whole world. Thanks, Michelle.
Thanks very much, James. That was really, really phenomenal. Thanks for the overview there. I think before I just jump on to the next speaker, because we've got sort of loads of questions coming in, I'm just going to point one at you. How do you, given that you're interacting with quite a few players across the supply chain, so how do you convince, sort of value chain partners, within the sort of trade circles to register their data on the blockchain? And how do you ensure that they're using the same data definitions, for example, and that data is comparable? So have you sort of experienced anything around that? What are your thoughts around getting different people kind of collaborating and coming together to work on that basis? This is a question from Virginia. Thanks for that question, Virginia.
I can take that question if you want, Michelle.
Oh, please, let's go ahead.
So, this is actually the most challenging aspect of blockchain, even though it enables multiple parties that don't necessarily trust each other to work together. Getting them together over the political hurdle of coordinating governance is probably the reason that we don't see the prevalence of many blockchain systems. And one of the reasons that I mentioned in my presentation that really the COVID vaccine supply chain gives you global incentive to cooperate, right? That might be the answer of how you push people to launch a system together. Because without this kind of incentive that everyone has to ensure the safety of their people and their countries, the political hurdle is indeed is very difficult to overcome. And that's a good question. That's what we're facing basically, and we're seeing in the industry.
Absolutely. And Nessa, there was a question for you as well in terms of, what are your thoughts around data protection, which, points to what you were, starting to say there. What are your points around that? How do we ensure that there's a certain level of data protection in place? What are your thoughts around that?
Well, blockchain already has the highest levels of encryption. And I think the interesting thing about the way that the platform is built is that it's permissioned for what people are allowed to see. So suppliers will see a different amount of information than regulators see. Not all information is transparent for all. And I think that should provide a level of comfort and security for participants.
Absolutely. No, thanks for that, Netta. I think, when we're looking at sort of data protection, and one of the areas that immediately springs to mind for me is also around, data laws. I think it's quite important that as countries shift and start thinking very big around this digitalization agenda, is actually to think about what are the data laws in place, and how do those restrict or enable, protect data. I think is very important. That will also impact in terms of how we share data. Lots of questions coming in, but I am keen to bring in my next speaker as well. So just to bring in and introduce Abba. Abba, you've been covering quite a lot around data more widely, but also I really want you to kind of give us a picture of how do we deal with these interoperability challenges, right? So that we can reap the benefits of utilizing things like blockchain or technologies like blockchain. What are your thoughts around that? Please give us your views, and also feel free to just tell us your experiences during COVID and how you've kind of navigated this space.
Yeah, thanks, Michelle, and thank you, Emmanuel and the WTO team for including me and Dore. It's great to be a part of this conversation because as Netta was saying, and as that some of those questions highlighted, this is the sort of dialogue that's really necessary to get us to the next level. And Michelle, you hit the nail on the head. Interoperability is a huge factor, and I think to understand interoperability in those issues, we also have to look at the context. Context makes a huge difference. A smile can be friendly, or it can be a threat depending on the situation. And the context of blockchain adoption in the global trade space is very broad. We've got, on the one hand, sophisticated multinationals with, long-term vision and the wallet to invest in the future, like James was just talking about some of the work of Louis Dreyfus. And we also have businesses at all scales, some of whom, as you were mentioning, Michelle, may not even really be, digital in any sense. But a lot of businesses, big and large, that just want to do what they know because change can bring risk. So blockchain or distributed ledger exists in this broader context of digitalization and technology adoption and trade. So to get the most out of it, we've got to think about that context. At Dore, for instance, we're always listening to our customers because that's how we learn what they need. And there's no sense building great tech for trade if no one can actually use it. So early on, our focus with distributed ledger mostly revolved around its tamper-evident nature. The foil seal on medicines, you can tell if someone has messed with it. So it gives a great audit trail. We saw a need for this and we built it. Companies using Dore can reliably report where inputs in their supply chain have come from and where their own products have gone. That's great. And it has important applications, provenance, control tracking, fraud around warehousing and collateral, which feeds right into finance. But once we built a system that can take all this information in and do stuff with it, we realized there were lots of other tools we can provide. And we learned this from looking at the context, talking to our customers about how their processes work, how they use technology. And we heard about this also from our keynotes about digitalization more broadly, what it can do for trade and global commerce. And an example for us from Dore, we had a client who started using our system because they wanted to monitor inventories where things weren't always adding up. As Netta might say, something was falling off the truck somewhere. And they used Dore for that quite successfully. Thank you, blockchain. No more fuzzy inventory, everything has to match. But they also ended up using Dore to manage their shipping calendar, to automatically generate documents And they even changed some of their production processes because they were able to access data visualization features in Dore that led them to think of things in a different way, because they don't have data scientists on staff, but they were able to see something which gave them great management insight. So in the end, it was kind of a multi-pronged technology adoption. It was catalyzed by distributed ledger, but it pulled in lots of other stuff, because once you have well-structured data, you can do lots of things with it. Now, just to pivot back to distributed ledger, it has its own context. It has functions for now and kind of what I think of as the functions for the future. I mentioned some of the functions for now around, the stability and the tamper-evident nature of the data structure. And the functions for the future really turn on interoperability of different distributed ledger systems with each other, because without that, it's hard to grow beyond a certain point. You have a bunch of islands and no bridges, as I think was mentioned earlier. So broadly, interoperability means how can different blockchains talk to each other? How can we pass data from one to another? They need a common language. That means data structure and protocols. Things are underway, like the WC3 standards that are emerging. As well as a common language, there needs to be some agreement on who is who. In other words, digital identities. And I think there'll be more on this on one of the panels later today. So context helps us understand where we are, and interoperability will get us to the future. Now that future, where everything is more efficient and resilient and great and automated, it doesn't just need technology interoperability. It also needs policy interoperability. Our keynotes were talking quite a bit about this, because the machine can't be better than the parameters we feed into it. We need continuing efforts to harmonize data requirements on global trade. It's one of the many areas of good work of our hosts today at the WTO, because supply chains need our help. It's a tough time right now. Over the last year, we've seen a lot of super efficient supply chains turn out to be super fragile. I'm sure James, has seen a huge amount of this just in the shipping sector alone. Bulks are out of control. So harmonizing requirements across borders makes traders more resilient and more able to be automated. And this is through distributed ledger and beyond. And to that question that you mentioned, Michelle, from Virginia, it's exactly this issue. Who will do this? It's work, right? To build around an API, input data and transmit data. People need a nudge. They need incentives to get technology adoption to the next level. So I guess I see a need for interoperability between policymakers and the technology sector. We need each other to build that future. So I can go on, but you probably get the point.
Absolutely, absolutely. And I'm 100% with you. I think, without that interoperability, we face a number of challenges. And of course, we're not just thinking about the technical interoperability between systems. Of course, we have some challenges around that. But even when you're thinking about blockchain, when you start to think about smart contract to smart contract interoperability, there's some challenges around that. But, that can bring in a lot of added value. And I know there's a lot of, developers and technical people really looking into that space and looking at things like API integration, as we've heard earlier on, and ensuring that, happens smoothly. But absolutely critical. I think one of the areas we haven't been as strong in terms of looking at is actually looking at that regulatory clarity and ensuring that, policymakers and, are working together and collaboratively across the spectrum. So you're thinking about regulators, you're thinking about, government officials, central bankers, whoever, and really trying to have that discussion around how can we ensure there's a certain level of interoperability, but also shifting from that, especially when it comes to trade and international trade, is also very much around looking at actually how can we ensure that country to country, we can be able to trade and do business, right? We can, handle settlements. We can look at a whole range of things. And just quickly before I move to the next speaker, maybe you can answer this question. And please, other speakers who are on, feel free to go into the chat and answer some of the questions. We've got a lot. It's a very popular session. So feel free to answer some of the questions that are in there. But one that I did want to point out is, why blockchain? We talked about encryption, right? And the cryptography that falls behind blockchain. But why blockchain? Should we, some of this stuff that we've talked about, can it not be done by sort of traditional systems and databases and all that. What makes it so special? Why is DLT so important, especially in the context of data? The world is revolving around data. Gold and diamond is no longer as important as data. So, why DLT, and what can DLT do to sort of secure and protect data?
Sure. So I'll jump in on that one. The nature of the data structure of hashing and the level of encryption that Netta alluded to, and it's something that you can calibrate, of course, when you build these systems, is a little bit different from a traditional database. It is, of course, a type of database, and in a traditional relational database, you need someone central to administer that. So if we had, the trusted, data branch of the WTO, where all members of a multilateral institution can look to that organization, which maintains this database and provides services around it, that would work too. Absolutely. The risks around that are someone central has to be trusted by everyone and has to put the resources into administering this tool. And what we know from kind of looking at the history of innovation is when we have huge centralized actors serving as the administrators of key technology infrastructure, there's a risk of falling behind in innovation. So we can look at governments around the world, and some governments run very sophisticated electronic single window systems. And they put so many resources into that, right? It's properly expensive to maintain those things. So there are cooperation dilemmas around, number one, who can be this trusted, neutral, central authority that administers the database, and everyone looking to that database to see what is, a true document, a correct document. They have to exist. They have to have the resources to put into it. And it's much easier to look at the incentives of these smaller actors and be able to create the infrastructure to connect them.
Fantastic. No, thanks very much, Abba. Really good answer. I know I'm conscious of time and we've got millions of questions, but I want to bring in Atu here. Atu, I know you've been doing some incredible work across the world, especially in terms of looking at sort of, trade and supply chain digitization as well, which is very much the topic that we're talking about today. So I'd love for you to just give us some examples of your work, and by the way, congratulations for the raise. I know you've raised and been successful at the raise more recently. So congratulations for that. How can we scale, what you're doing, right? Because I know you're operating around the world. Just a couple of weeks, I think both yourself and myself were at the South Africa conference as well. And I heard a lot about the work that you're doing with the banks and helping the banks as well to transition. So please do share with us, some of your work and your ideas around scaling what we've got going on.
Thank you so much, Michelle. And thank you so much, Emmanuel, for having me in this panel. It's my privilege to be here. I'm in sunny Singapore, and as our keynote speaker, Mr. Casey Hong talked about from IMDA point of view, what Singapore is doing is really exciting. And, John Denton, who talked about, Digital Standards Institute, which is led by Oswald right here in Singapore, is also exciting. So I'm at the right place, in the right city, in the right sentosa here. So I'm just, just feeling the moment here. So just a little bit about, if you could go to the next slide, just talk about what DLT Ledger is for those who are kind of coming in for the first time. It's really what I call a plug-and-play blockchain platform. And we have taken a different approach compared to the many other platforms out there, where we really look at from a lens of how do I reduce the lead times and delay in the cross-border trade and the supply chain transactions that are happening, right? And we identified there are 26 different types of trade that one would do, right? And these are just across what, we have been working between the corridors of, Asia and Africa and Middle East, right? Where we are doing most of our work. And how do I actually...
You've gone a bit faint, Atu. I don't know if it's just from my side.
Yeah, can you hear me okay?
Much better. Please go ahead.
Yes, Yeah, so I was just saying that how do you improve the operational efficiency by really reducing the overall cost of financing for the buyer and seller on the trade, right? And it's really looking at optimizing the workflows, right, for the corporates, for their partners, and really in the end reduced in a journey a reliance on paper, phone, and email, right? So what we are doing here in Singapore, right, Electronic Transaction Act is a great starting point, but that's a good news. Not so good news is this is only, there are only a few countries who are doing so, right? So you need to make sure that you get support on the other end, but you need to have various stages in the adoption that you could really put through to the customer, to the corporate, so that you could see the benefit of digitization in the waves, right? So that's really where DLT Ledger is, and I think thank you so much for supporting us with the comment on thanking us on the raise. I think we are just getting started. We have got significant firepower in terms of the platform capability as well as the number of people who are in the platform. Interestingly, we kind of work with the corporates. One of the corporate told me that I have an SAP system and I have DLT ledgers, and that takes care of everything that I need to do for my cross-border trade execution. So that's kind of the space that we are in, and that kind of also alludes to some of the points that my earlier speaker made about looking at the parameters around which one would work, right? Looking at kind of complementing those parameters into a set of piece of smart contracts that you could kind of plug and play, allow the customer to configure it, providing them a plug and play environment for them to build the workflows around how the execution that they want to track. And then providing the banks, the financial institution, a platform to authenticate the commercial documents that they are getting from their suppliers, their exporters, their importers, and kind of digitize the interaction, because a lot of time that we saw is being spent between corporate to bank interaction. Not just looking at checking the documents, but also the interaction could also be digitized. It could save some time and effort. So automating those multi-party transactions with other parties also coming in a collaborative way, so that you could just get started even with 2 parties. You could add a 3rd party, it gets better. We are divided 4 party, it gets even better, right? So that's really what DLT Ledger is. So if you could go to the next slide for me, just talking about primarily as a collaborative platform where we allow replacing emails, replacing WhatsApps, replacing phone calls, replacing courier to some extent, right, is really the area that we are working on. And there are significant inefficiencies when enterprises talk to other enterprises. The challenge is that you don't really know whom you are going to talk to, because someday you're going to talk to your trusted LE partner, someday you're going to speak to your SME partner. And then how do you kind of create that a true collaboration platform for a corporate is really where the vision of DLT Ledger is. And it's not just a distributed ledger, right? It is a combination of the machine learning, AI, and open API infrastructure available to you in a very simple, easy to use application that can be used in mobile. Remember, I think we had an opening comment which says that only 0.2% of the world trade is digitized today. I mean, that is a challenge to all of us in this call, because if it is just 0.2, even on 22nd of in the March 2021, where year of COVID has happened, we still only have 0.2% of the world trade digitized, right? So it is not so much about the technology, it's about, can I make it easier for someone to actually be on the mobile phone and do a particular task or an activity, which he cannot do today, right? So that's kind of where we feel the collaboration is a buzzword here, not so much as blockchain or distribution ledger, right? If you could go to the next slide, just talk finally about what we feel are the areas where we kind of work together, right? So from a corporate point of view, what are the use cases we work together with? So we use cases where people need authenticity into the documents, whether it's a PO or an SO or a certificate of origin or a guarantee or a bill of lading or any of the other documents that you are sending across the certification. And you need a provenance and track, right? So that's kind of the one area that we kind of aim to solve for corporates. Then we look at efficiency and cost reduction, right? So fundamentally, any digital software has to save your cost, has to improve your efficiency. And if you can get into that economics right, I think then we kind of hit the tipping point, right? And finally, I live in the world here where, huge number of SMEs, in fact, more than 90% of the SMEs in Asia are strapped and they don't really have access to financing. So we have been working very closely with ICC and ICC announced ICC Trail for Capital. We are already working very closely with IMDA to ensure that all of these SMEs which are out there, primarily in Singapore and the region, have access to this alternative sort of funds that's coming through, which typically are not served by the banks, because today Singapore is now increasingly becoming a capital for the alternative financials. And how can I actually provide an SME or a corporate to some extent better access to financing? So if a final slide in terms of introduction of us, if you can move to the last slide, Michelle, which talks about really looking at the use cases and the different waves that we could build with the customer, right? So, I mean, we talk about trade, and like I said, devil is in the detail. There are different types of trade, different types of origination, destination that one could work with. And there are different levels of maturity and authenticity that one could bring into table. So it's not everything is done on a day one. There is also interoperability that we talked about, but it's all about adoption. So we have got tons of work on adoption, which is really where, we are feeling, very happy that we get our customers to adopt us, because it's all about adoption. Second is about tracking provenance sustainability in the areas where you could actually deliver the value, right? Where somebody is willing to pay for that provenance and sustainability, that's the stuff that we could look at digitizing, not for the sake of doing it because I could now do it well. So there has to be an economic sense for provenance and sustainability, which we have seen in certain use cases and certain industry. Then looking at, corporates have spent tons of money in their digital system, but they still can't get the information out. They can't really have a simple questions answer. So how can you actually automate what you got into your ERP systems or your Salesforce systems? And how can you actually make use of that in your trade for an intelligent conversation? Supply chain finance tracking, which is, I think, an increasing topic, and it's really interesting now. How do you actually really track, and how to make sure that you're working with an authentic set of partners when you actually do a supply chain tracking, supply chain finance. And finally, in terms of DLT nature, being a network creator and a network builder, we allow corporates to build network. At the same time, we recognize that we need to connect and interconnect with other networks. So we work together very, very consciously to work together with other networks which are out there, which are successful, which are having adoption. And how can I actually kind of have a wave of this interconnection of network, which could increase our adoption from 0.2%, hopefully next year, Michelle, if you have this called, at least to the 2%.
Absolutely, absolutely. Atal, thank you so much. I mean, you've covered quite a lot there. I think, yes, absolutely, it's about adoption. It's about building trust. It's about enabling, trust. It's about digital trade, which you have been covering, and I very much, covering that. But it's also about, the small, medium enterprises that you picked up very well. A lot of the time, we talk about, what blockchain can do in very generic terms, but actually, if, blockchain, and it's not just blockchain in isolation, as you've said, it's very much about that combination of technologies to untap value, and ensuring that value actually reaches those small, medium enterprises is absolutely critical. Now, for me, I'll leave you with a bit of a challenge, and you don't have to address this now because, of course, of time. We talk, quite often about how banks are not sort of geared to support SMEs, but why not? Why are we not innovating, right? So that we can be able to actually support banks. Yes, we have to look at the laws around, sort of things like capital requirements for the banks so that, they're able to continue and all that. But it's very important, I think, as we move forward, that business is no longer as normal, right? We are transitioning. We have to be brave enough to say, actually, let's try and do something differently. So again, very, very leaving you with a bit of thought, and the audience with a bit of thought, that we do need to look beyond just the traditional means if we're going to shift that percentage you talked about in terms of digitizing in trade and start to think outside the box and start to think about what other opportunities can we seek, be it around finance. And I'm talking about things like decentralized finance. I'm talking about things like, cryptocurrency, which a lot of people kind of don't want to talk about. But those assets are actually coming into play. And in fact, I think it was Citi who said, actually, is Bitcoin the new, currency for trade? Those kind of conversations need to be had, and we need to start to think about actually what are the alternatives. Are the alternatives fit for purpose? Do we need to regulate around the alternatives so that we can make them fit for purpose, so that we can serve those markets, right? Especially the small, medium enterprises, as you've said, around the world, in Asia, in Africa, 60, 70, 80%, are SMEs. So we need to look at SMEs. And with that thought, I want to really bring in my next speaker, Deepesh, who has been covering, a lot around trade around the world, and has done some phenomenal work and has really been critical in terms of raising awareness around some of the challenges within trade, but also the opportunities, and especially around trade finance. Trade finance is something we talk about all the time. That 1.5, 1.6 gap, keeps kind of growing, right? But at the same time, there's new innovative ways of financing. Is there an opportunity, Deepesh, for us to start to explore a little bit better, to say actually what else is out there in terms of alternatives for finance? How can we, sort of digitize, but also innovate the trade finance space so that we can actually serve the markets, we can grow the markets, we can recover and build back better, we can transition and support those small, medium enterprises. So Deepesh, please do come in and give us your thoughts around what the work that you've been doing, especially around mapping what's going on with the trade finance projects. Thank you.
Thank you very much, Michelle. Thanks for your kind introduction and an excellent panel session so far today. And I really applaud the work that you're doing at Global Policy House, advocating the use of blockchain and DLT in trade. And also, I completely echo the works of this fantastic panel, Netta, on how public blockchain can be used to build trust in supply chains. James' work on blockchain to ensure inclusivity and transparency in GVCs for corn and soybeans, for example. ABBA highlighting the importance of doing more stuff with data once systems are in place, and also Atul's work on reducing the time lag and delays in MISME financing through his platform. And I guess to your point, where's the innovation? Is it happening? It is, and hopefully this short presentation will show that. And actually, I think the world looks a lot different today than it did at the end of 2019, which is actually when we first published the periodic table of DLT in trade, and over a year's worth of progression has been both accelerated in some areas and also shunted by COVID-19. And we're still figuring out the widespread implications despite some recent successes in vaccine rollouts. Now, I just wanted to take a bit of a step back and look at where we've come in terms of trade tech, specifically DLT in trade in the past decade or so. And it builds on the publication that Emmanuel Gan and I launched back in November, entitled Blockchain and DLT in Trade, Where Do We Stand? And as discussed in today's session, we really are seeing forward progression. We quantified this progression a few months ago, which I'll talk about. We published an updated report on the entire landscape surrounding the use of DLT in international trade. And I guess here, I'm here to give a quick overview on the key findings, and we're honored to present it in today's Global Trade and Blockchain Forum. So just onto the next slide, the WTO and TFG conducted a survey of firms specifically operating in the DLT space, and the results of this research, which looked to gain a detailed understanding of the impact of the pandemic has had on DLT in trade, is really shown in this slide. And as you can see in the diagram on the right of this slide, we asked 54 respondents how the pandemic has impacted their plans and activities with respect to DLT. And I guess in line with the other recent 2020 ICC Global Survey on Trade Finance, the WTO's TFG survey indicates the majority of firms have experienced a positive benefit to their DLT plans and activities as a result of the pandemic. And we've seen work from home orders in many nations around the world. And banks and corporates have been forced to produce rapid digital solutions in order to remain operational. Now, the WTO-TFG survey regarding the impact of COVID-19 on DLT trade, we also sought to understand some of the challenges facing these firms as they try to scale up their solutions, which is shown in the diagram on the left-hand side. It's interesting to note that legal challenges were rated as the most pressing than any of the other challenges. And this suggests the largest current challenge facing the deployment of DLT solutions across the industry relates heavily to the lack of legal clarity and enabling framework that firms face. ICC noted that when fighting to overcome the challenges of the COVID-19 pandemic, most banks have not yet seen meaningful support from authorities to facilitate trade on digital terms. And I guess if the industry is to move to a more digitalized world powered in part by DLT, regulatory development really needs to keep pace with technological advancement. So now on to the next slide, our periodic table. So this is our latest periodic table of DLT projects in trade and trade finance. And for those of you who were here with us in person in November 2019 at this same forum in Geneva, a lot has changed since. And some of the projects that were viewed in the original version have fallen aside, whilst others have risen to take their place. And a few of the projects have progressed from consortium to an incorporated legal entity, enabling them to provide the full commercial services that they were previously unable to. And most projects, however, have made steady progressions towards their goals of a digitalized industry. And in this updated version, we focus on hearing some feedback there. This updated version focuses again on the digitalization side of DLT and trade. And we've sectioned it into around 7 categories: so supply chain finance, trade finance, know your customer, insurance, DLT, digitization of trade documents, shipping and logistics, supply chain, and other initiatives for projects that don't fit neatly into those other sections. And similar to the previous edition, each project is presented with its underlying technology, as well as an evaluation of its current stage of maturity. Now, the most important part of this is at the time of initial publication, so back in November, the average stage of maturity across all the projects was profiled to be 2.3 out of 5 in 2019, with 1 representing proof of concept, so very early phase, and 5 representing live and running or well established. And back in November 2020, so nearly a year later, the average maturity has risen to 3.3 out of 5, which means the average project is between the early stages of production and being live and running. And this rise in the overall maturity indicates that despite some challenges amongst individual initiatives, the industry as a whole has been steadily progressing in a forward direction. So on to the next slide. According to our surveys, a lack of standards is viewed as one of the largest challenges facing DLT and trade initiatives, and we've brought it up several times on the session today. And to help address the challenges created by a lack of standards, developing and implementing globally accepted digital standards for trade is really a necessary step. And we identified the main initiatives working towards standardization in this space. Now, some standardization projects are focused on particular sectors or geographies, whilst others are a bit more general. Some are, of course, spearheaded by large international organizations, others by private companies. I think any discussion of standardization in a digitalized trade world would not be complete without mentioning the importance of regulatory framework, which we're talking about later, and building that harmonized regulatory framework. And a key actor in this respect as the United Nations Commission on International Trade Law, or UNCITRAL. And whilst this isn't a standardization body, it plays a key role in working to build a harmonized international trade law framework, which will help drive that progress. So I guess just to conclude, today we're beginning to see the ideas of DLT and trade coming to fruition. And the past year or so has brought many, many changes to the space. This year is on pace to do the same. And with the continued work and dedication that we've seen from across the entire industry, working on at the intersection of digitalization and trade, progress will be made. Back to you, Michelle.
Fantastic. No, thanks, Dipesh. A great map up there. I think, I'll bring back the rest of the panel now because I have a couple of questions. There's loads of questions in the chat and we might not get to all the questions, but, a lot of the panel members are sticking around and might be able to pick up some of your questions later on. The other thing I wanted to point out is there's quite a series of sessions following us that will pick up on some of the questions that we don't pick up. So the question from Louise around, changes around the bills of lading and the different documentation. We have a session coming up which will go into in depth into that. Totally agree with you. I think, innovating around the documents will make a huge difference, but it is not just about the documents. And again, there was a question around actually, let's not just focus on the documents. How can we innovate and maybe play around with smart contracts, for example, to digitize the other elements, things like trade AI and stuff like that we can look at. So some of those will be covered as we go along. But I find one question particularly interesting here, so somebody has asked, what is the current kinds of digitization journeys for countries around the world, especially in relation to single windows? Right? Are the governments around the world or members of the WTO, responsive to the ideas of blockchain, responsive to the ideas of innovation? Where are we in terms of, looking at that? I throw this out to the whole panel. What are your thoughts around actually, is blockchain actually delivering? Right? When I sort of entered the industry in the early days, loads of people looked at me like I was a mad person for even talking about blockchain or Bitcoin, right? So where are we actually? Is blockchain delivering, or are we still having those conversations, and are we still kind of sucked into the hype? What are your thoughts around that?
And Michelle, if I can jump in on that one, I'm sure we all have a lot of thoughts on this, but to me, it comes back to this view I have of there's blockchain for now and there's blockchain for the future. And it's kind of like saying that, so some people may say, well, blockchain isn't delivering, but I would say it is. And there are the things it does now around the tamper evident nature of the data structure and what we can do with that today, even when we don't have connections between our digital islands to really unleash the power of smart contracts and things, because that takes evolution in law in a lot of countries to make those legally binding. But saying that because there's still a lot of payoff curve in the future that we shouldn't worry about it is kind of like saying we shouldn't think that the internet is a great tool, even though 50% of the population doesn't have access yet, because of course it's a great tool and we've got to build together toward that future.
Absolutely. And any thoughts on that, Netta?
Well, I'm a little bit less optimistic at the moment. One of the things the Hexa Foundation does is work together with governments to educate them on the added value of blockchain technology. And while I've seen an eagerness to learn and have also deployed successfully a pilot, for example, in one of the world's largest development banks, the follow through after pilot stage seems too big of a leap at the moment for governments or institutions to take. And I think it has to do, again, with what we were discussing in the past, the political hurdles that need to be overcome in order for everybody to work together and govern a platform, or even in order to just get the multiple parties to embrace it and work together. I do believe that 10 years from now, the technology, or maybe even 5 years from now, the technology will be much more prevalent than it is, and maybe a crisis such as what the world has been going through recently will push us in that direction. But I'm not seeing government embracing right now.
Thanks. Thank
Michelle,
you.
if I
Sure,
can just
sure.
jump in, right? So Singapore has talked about with the 17 countries what they call digital economic partnership, right? So I think one of the ways this problem can be solved is really looking at the like-minded governments and like-minded trade routes who are happy to digitize. So one classic example is Singapore and Australia Digital Economic Partnership Agreement. That's already been signed by Singapore and it's already in operation from January this year. So it's much more easier for us to automate the trade goals from Australia for transshipment out to the rest of the world. And you could actually then see that single window equivalent of effect happening in that area, right? Second could be that ASEAN Economic Committee or a single window on ASEAN could work if the countries around are kind of working together for the digital economic partnership agreement. So I think I do see I'm a bit more optimistic than Netta in terms of seeing that there would be certain origination and destination panel of countries, if you will, that will emerge, that would basically be taking this digitization forward. And I don't necessarily believe that it has to do with the blockchain. It has to do with those processes being set up in those countries, the adoption. I think the technology is proven, technology is already there. It is a combination of technology that makes the solution work. And I think then it's about those trade pairs, the countries that could make it happen, is what I feel. So I think we also need to change the dialogue a bit to go back to regulatory and say, they always blame it on blockchain, but it's nothing to do with blockchain. If you have this agreements going between two countries, then I can happily do that because technology already exists.
Thank you so much, Atu. I mean, we could go on and on, guys. I love the debate going on.
Maybe
and
I can share a little bit our observation based on our experience.
Sure, please. Sorry, James, before you do that, what I'm going to do is, because we're obviously running out of time, is I'll let you go and have your closing statement. And please, through your closing statement, if there's one word that you can use to describe what the future looks like, please do so. And what I'll do before I let all of you come with your closing remarks is I want to just give it a quick sum up of what we've heard so far. I think absolutely, governments have to, embrace and really engage with the decentralized world, put it that way. Within the decentralized world, you've got a whole range of different technologies, emerging tech. If COVID has shown anything, it's very much that, the digital economy has a lot to offer, but that digital economy cannot function on its own. We do need that regulatory, clarity. We need the regulators, we need the governments, we need all these players to come together. I believe the two worlds, which is the digital economy as well as the traditional economies, can coexist. And actually, we can reap a lot of value from those two economies. So very, very important that we do engage, that governments start to interact. And certainly, look at the continent of Africa and the policy shifts happening there with the free trade area. And certainly there's a lot of innovation that's already being involved. A lot of conversations about how do we come together and utilize that combination of technologies like Atu was saying. So there's a lot of momentum, and I think it's fantastic. I'm very optimistic. I always have been when it comes to blockchain and the digital economy and digital assets, because I see a future there, and certainly there's a lot of work to do around that. But just to sum up, I really want to thank everybody, for all your questions. We'll get to them. I know the next panel is waiting to jump on, but just quickly rounding up everybody, please, give me your closing remarks and one word that you want to describe the future. Thank you. James, we'll start with you.
Thank you, Michelle. I think one word is collaboration. We have already embarked on the collaborative projects. I think blockchain and technology needs collaboration across the world. Fantastic.
Thanks, James. Netta?
So I would say transparent. I think we are sick and tired of not knowing what's going on in large organizations or in governments. And I think blockchain as a technology offers us that transparency, and I believe we'll have it in the future.
Fantastic. Deepish?
For me, it's necessity. Digital trade is no longer a nice to have, it's a must. don't get left behind.
Thank you. Atu?
Yes, I would echo James. It's a collaboration.
Thank you. And Abba?
Yeah, so a slightly long-winded way of saying I'm with James and Atul on collaboration. Innovation needs space to grow, and technology needs investment to become widely adopted. Investment needs stability. So how do we get between that space that innovation needs and the stability that investment needs? And that's the collaboration that comes with public dialogue and policy building.
Thank you so much. And it's a wrap, guys. I think we can go on forever, but it's a wrap. It's fantastic. Thank you, everybody, for tuning in. Really great to have participated in this panel. I thank the panel, great panel, very experienced people. And please do reach out to the panel, and I will hand over to Emmanuel. Thank you very much.
Thank you very much. Thank you very much to all the panelists and to you, Michelle, our moderator for this session. Thank you all for a very, very engaging and insightful discussion on the importance of transparency of supply chains, initiatives taken to digitalize trade, reduce the time lag, on opportunities it opens for MSMEs, on challenges such as interoperability and scaling. So a big thank you. You really set the scene remarkably for the rest of the day. We're going to dive deeper into these issues in the other sessions we'll have. So we'll now have a very short break to allow the speakers of the second session to come on board. The next session will be about digitalization in support of trade finance, and we touched upon these issues in this current session. So the session will start in less than 10 minutes at 55 past the hour. So don't leave us. We have some excellent experts in the field who will present some of the exciting blockchain projects on which they're working to help make access to finance and trade finance easier using blockchain, and especially for MSMEs. So see you in a few minutes for the next session. Thank you. It's now 55 and we have all our panelists, so I suggest we start. Welcome back. Welcome to the second session of the Global Trade and Blockchain Forum, which is entitled Accelerating Digitalization to Support Trade Financing. And we've already touched upon this issue in the opening session and in the first session, but in this session, we'll dive deeper into the issue of access to financing and how a DLT can facilitate access to financing, in particular for MSMEs. So we have a great panel of finance and trade finance experts involved in blockchain projects with us for this session. So I'm sure we'll have a very rich discussion. Dipesh Patel from Trade Finance Global will moderate the discussion. Dipesh is the editorial director at Trade Finance Global. He's also the host of the Trade Finance Talks podcast and Trade Finance Talks TV. Dipesh and I co-authored a couple of publications on blockchain, and we're launching a new one today. In addition to his work at Trade Finance Global, Dipesh is a strategic advisor for World of Open Account and a board member of ITFA's Emerging Leaders Committee. And he also sits on the FinTech Working Group of the Standardized Trust. So over to you, Dipesh.
Thank you very much, Emmanuel. Ambassadors, distinguished guests, ladies and gentlemen. My name is Dipesh Patel, editor at Trade Finance Global. Now, imagine how different the world might be today if, in 1976, Apple computers had not obtained the $15,000 in financing that they needed to buy the parts to fulfill their first order. How many entrepreneurial visions with the potential to change the world have fizzled out of existence due to the lack of financing? For many micro, small and medium-sized enterprises, MSMEs, around the world today, access to financing can mean the difference between prosperity and bankruptcy, and working to identify, understand, and ultimately overcome the challenges that MSMEs face in their quest for acquiring financing will help to ensure that the next Apple computers do not cease to exist before it has the chance to change the world. There are many challenges that have been identified as impacting MSME financing, and there is no doubt that the COVID-19 pandemic has affected the landscape. Now, digital technologies from cloud computing to application programming interfaces to the Internet of Things, artificial intelligence, and of course, distributed ledger technologies open up a whole range of new opportunities for MSMEs. New business models and new approaches to MSME financing are emerging. The technology is there, making interesting promises, yet MSMEs continue to struggle to access financing, especially trade financing. So how can we unleash the potential of these technologies? Today's panel session looks at the why and how. Why is there a challenge, and how can we accelerate digitalization to support trade financing? I'm delighted to be joined by an excellent panel: Idowu Akinde, founder of Boolean Labs Hyperledger Lead African Chapter; Mohua Banerjee, Senior Director EdgeVerve, Head of Business for Finacle Blockchain; Zul Javed, CEO of UAE Trade Connect; and Vinay Mendonca, Global Product Head of Trade Finance at HSBC. All, thank you very much and welcome. So to start off with, I'd like the panel to introduce themselves, a very quick introduction, 60 seconds or less. Who are you, where are you from, and what do you do? Idowu, let's start with you.
All right, thank you, Dipesh. Thank you, Emmanuel. Thank you, everyone. Distinguished guests, it's a pleasure to be here today. My name is Idowu Akinde. I'm from Lagos, Nigeria, and I support entrepreneurs and intrapreneurs, essentially startup founders, as well as venture teams and enterprises, to co-create venture building, to co-create technology solutions, ranging across many verticals. Some of them blockchain solutions, some of them non-blockchain solutions. Thank you very much.
Mohua, over to you.
Thanks, Dipesh. Good morning, everyone. Thanks, WTO, for this opportunity to speak about the work that we're doing at Finacle. We go by the product suite name of Finacle Blockchain. We provide solutions around trade finance, payments, identity management, and fund distribution. So today I'm going to speak about how Finacle Trade Connect, a product around trade finance, is helping 15 banks in India to form their first consortium and support their challenges in trade finance and their customers to get better financing.
Vinay, over to you.
Thanks, Dipesh, and thank you, Manuel and WTO, for having me on this panel. I run the trade finance product globally at HSBC. A significant part of our agenda at HSBC Trade Finance is to digitize trade so that we can take trade finance deeper and beyond the $750 billion trade flows that we already support, so more MSMEs can access competitive financing. We want to quicken the process and make it faster and make it safer and cheaper. To that end, we've invested in different initiatives internally and in the industry, and really looking forward to talking about some of these, Dipesh, during the next few minutes.
And Zul, over to you.
Hi, Dipesh. Hi, Emmanuel. Thank you all for having us. Thanks to the WTO for hosting. My name is Zul, and I look after an initiative called UAE Trade Connect. This is a consortium of 8 of the UAE's largest and most innovative banks, along with Etisalat Digital. Etisalat, you may recognize the name as the leading telecom company in the UAE, as well as in the Middle East. And lately, we've been doing a lot in the digital space, and UAE Trade Connect is one of those innovations. We'll be talking about it in a few minutes.
Thank you very much also. So a huge, broad representation of financiers, technology, and also corporates from Africa, India, UAE, and also global perspective. So we'll start with a very quick panel discussion, kind of framing the problem. And I'd like to give everyone a couple of minutes each, and we'll go through their slides on short presentations on, I guess, framing the problem. Idawu, let's start with you. How can we use blockchain to empower MSMEs in developing markets? And what's your African perspective?
All right, thank you again, Dipesh. So, are the slides running? Are you running the slides? Okay, thank you. So, the African perspective is a very interesting one because, hey, traditionally the word Africa has been, almost synonymized with poverty, lack, wars, famine, and stuff like that. But I think that the world has been looking at Africa through the wrong lenses for the longest period of time, for the last few decades. Rather than taking an aid approach, perhaps a more effective approach, a more efficient approach would be to take a trade approach. And so, Ngozi Okonjo-Iweala, you guys know her as NOI, we back home know her as Ngo, and that's an inside joke, says that, the new DG of WTO says that if you want to help Africa, really, really want to help Africa, then the more efficient thing to do is to trade with her. Essentially saying that aid is good, but it's a short-term band-aid, right? Trade is a better long-term solution, like a vaccine, right? Something that solves a systemic issue at the root level and has far more impact in terms of reach. Can we go to the next slide? Having said that as a background, one of the observed things is that Africa represents Africa's contribution to global trade flows over the last few decades, 45 decades, has consistently been less than 5%. And there's a myriad factors are responsible for that. Some of them, we can categorize them as volume factors under the first section there, and others, we can categorize them as quality or efficiency factors. So of course, Africa has very low productive capacity. We largely skipped on the Industrial Revolution, as well as a huge trust deficit. That is definitely on the table, and I'm not gonna cover that. Also, there's a fragmented trade ecosystem being addressed by the current Africa Continental Free Trade Agreement, And then there is this point that is being championed by this particular conference, which is the inefficiency right now of trade finance, both intra and inter-trade within the continent and with other continents. And then there's unethical consumption. So if you just focus on that number 4, which is the one with the red circle, next slide, please. If you just focus on that particular item, you find that, you know, given this data by the Africa Development Bank, you find that out of all the rejected trade finance applications by small and medium scale enterprises, a huge 42%, almost a half of them, are rejected just because of creditworthiness. However, when you think about it, creditworthiness is actually not necessarily a real creditworthiness issue. It's actually a documentation issue because, again, Africa skipped on the Industrial Revolution. And so there's huge swaths of undocumented people, operations, processes, transactions that are going on all over the African continent. And so the official providers of capital, the official providers of credit are not, because there's no documentation about this huge 60% of the contributing workforce, they are not able to provide them capital. Therefore, one can fix this almost half of the problem. Does that mean that, you know, again, using the Pareto principle, does that mean that you've solved at least half of the problem? And the next problem there is the single obligor limit, and the next one is the balance sheet constraint. So you see that having, of course, again, going back to the point about data and documentation, we're only able to get this insight from, can you hear me now? Is my audio good? Okay, all right. Someone said that there's a problem with the audio. All right, so you can see that we're only able to get this insight even based on the fact that there is available data at the moment from the AFDB. So if you look on the right side of that, you see that creditworthiness alone, there are a couple of startups, of course. And what are people doing to address these problems? Okay, so on one side, there are a couple of technology startups. Some of them, the ones highlighted here, have some blockchain implementation or some blockchain aspect to them. There are a couple of startups, a couple of technology initiatives that are trying to address this huge gap. One of them, I consulted for them last week. What they do in Nigeria is that they take an alternative approach to addressing that creditworthiness problem. So where there's no data, right, for a lot of people, they're looking at what are the attributes of the average Nigerian and how can we extend credit to them. So take, for instance, in Nigeria, owning a vehicle, owning a car is very, very sentimental. And no Nigerian that owns a car wants to lose that car. So this particular startup that I consulted for last year came up with a model, an AI-based and blockchain-based model that can assess a person's financial records and use that asset, that vehicle, as a collateral, you know, and then multiply this startup by hundreds of fintech startups that are just coming up. And you see that actually the age-old documentation, or AKA creditworthiness problem, doesn't actually have to exist at such a degree that it exists. So that's the summary of the of the submission that I want to make today. But if you look on the right, there are a few startups there. PingMe is Karma Chain, Afex, Binkabi, and TradeX are doing a few things on the creditworthiness side. And these areas where we have blank spots are essentially virgin for anybody. In fact, even if you look at the places where we have active players, there's nothing that says that there's no new player that can join. I hope I haven't taken too much of your time. Dipesh.
Thank you very much. Moyua, over to you. And I guess it would be interesting to hear what you guys are doing to create an ecosystem in India, Finacle Trade Connect.
Sure, Dipesh. So Finacle Trade Connect, our flagship product for trade finance on blockchain. So we started first by looking at, how do we get the banks to start adopting the blockchain technology itself, because there was a lot of apprehension when we started off in 2017. So it's a permissioned private network between banks, which first started to look at the letter of credit use case and then is now expanded to much more than that. So it's a platform which basically provides banks and various trade partners, the buyers, the sellers, the freight forwarders, the logistic providers, even to the extent that you can connect customs and ports to the solution. It's basically working as a single network, trusted, with single sharing of data on it. We also worked with our partners like TradeStream, SDocs, Visa, and Portal, which is basically powering the PCS1X, which is the port community system in India, to look at a single window for the entire trade ecosystem. So right from initiation to payment, it's a single platform for the banks and its corporate customers to look at doing trade finance transactions. Now, we started off with a bank with 500 corporates, and we're currently looking at doing USD 4 billion worth of trade on the platform itself, and then moving on to doing with about 15 banks, a consortium that's has been legalized. It's going to start operations in India, managing about 84% of the country's trade. So what are we trying to do here? We're actually providing a platform which provides the banks to do all kinds of trade finance and supply chain financing instruments. So it just doesn't support letter of credit, but open account, invoice financing. If you look at the length and breadth of the instruments that are available, you could do so. As the platform processes invoices on the platform, it helps you to ensure that you're not getting into the situation of double invoice financing frauds, etc. So there are various analytics that has been built into the platform, and hence it is helping the banks to understand the capability of its SMEs as well as its corporates in terms of their payment capabilities, as well as look at more financing options that they can offer to them at various terms, and come up with various innovative business products. So, so banks can look at various models in which they want to go do a blockchain network. They could first start small and do it themselves with their corporates. They could open it up as a trade, as a service. Now, there are many partner banks who are actually not ready to adopt or invest into the underlying DLT and the solution, etc. They're still doing the traditional way of it. The platform helps these banks to be onboarded by their ecosystem players in terms of what we call as a virtual entity onboarding, thereby supporting the adoption and bringing the ecosystem together. There are corporates who are still, struggling with paper, with their ERP systems, etc. We have a facility called assisted service, by which the bank's relationship managers can help these corporates to look at doing their trade finance request in a better way. So moving on to the next slide, which is more in terms of what we're doing around helping and supporting the SMEs and MSMEs segment of the customers, which we know is right now struggling with the financing areas, in terms of the fact that we are providing the capability on the platform and to our customers for them to offer both buyer-led financing as well as supplier-led financing. As these SMEs deal with smaller values, they are more preferred in terms of doing bulk uploads of invoices, etc. And as they provide that information, the system provides the banks to auto-finance them of request, and do the eligibility checks automatically and help these customers get better financing. So we're basically looking at supporting the ecosystem with better features in terms of digitization and using the inherent capabilities of the blockchain technology.
Thank you very much, Moa. And I guess that piece really around automated finance options with smart contracts helping $4 billion of trade is incredibly important in the Indian ecosystem. Zul, perhaps I can move over to you for an introduction to UAE Trade Connect and also the co-creation with Etislad Digital.
Thank you very much. Just if we can move to the first slide. So UTC is a platform, and what I'm going to describe here is only the first use case. We want to deal with something tangible and manageable before we start to grow into different use cases. So the first problem that we've sought to solve is this age-old problem where banks are competing for trade finance business, but there is a possibility that those invoices are being duplicately financed. One bank may be financing what another bank has already financed. Now, assuming they were able to share data or they wanted to share data, this is what the relationship would look like. It would turn into a many-to-many relationship. And this is only for 8 banks. Add another, add another. There's more than 40 banks in the UAE. So it's an unfeasible set of data sharing. So click to the next slide and you can see why the blockchain solves all of that problem, because we're able to share data, we're able to hash data, we're able to conceal data, and yet we're able to protect the nature of the data, knowing that once something has been entered onto the blockchain, it can't be changed again. Now, in addition to that, there's another layer. If you click once, Deepesh. So we've created a central node in which we are looking at the fraud detection capabilities. And within the central node, we have a one-to-one relationship with each bank. Limited set of anonymized data is provided to us, having read the invoices that are being provided for invoice financing or for open account or for LCs. And what happens is within this central node, we have a whole layer of machine learning and artificial intelligence, which is going to get better over time at detecting, for example, whether the trade is a duplicate or whether it's a genuine trade. Do the prices make sense? If somebody is selling steel billets, does that match up with the price that was in the market for that week? So once you click through to the next slide, you can see that this is what the complete solution looks like. We have a blockchain in which data is being hashed and protected, but a limited set of data is being shared centrally with the UTC engine to protect the banks from any possible frauds. Just a quick shout out to my partners. We have 8 banks who have been really, really helpful in creating this because of the domain knowledge they have, the real life experience. And we have a partner, Avanza Innovations. Avanza Innovations has done several blockchain implementations in the UAE. And on the left side, you see at the Salat Digital, we are the technology provider, we're the architect, and we are the cloud provider.
Thank you very much, Zul, and we obviously included UAE Trade Connect and also Emphasis Finacle Trade Connect as well in our periodic table from the previous session. I think that piece around duplicate invoicing and multiple banks financing invoices is incredibly important, and we can go into that discussion a bit later. Vinay, I guess from more of a global overview, how can digitalization make trade finance more accessible from an HSBC bank perspective?
Thanks. So I think just 2 reflections before I go through that, from what the pandemic kind of, some learnings from the pandemic. One was across our global network of supporting multinational conglomerates and corporations and all the way to MSMEs across our network, we saw the impact of the interconnectedness and networks where the slightest disruptions had an impact across the board. This is, I think, something everybody kind of knew about. But I think there was this clear realization that across supply chains from MSMEs, SMEs, mid-caps, large corporates, there was a need to build more contingency and more inventory. And I'm not saying a step back, but move a little bit away from just in time to actually creating more inventory, creating more buffer. That needs more financing. And basically what you had was a compounding of an already large trade finance gap in the MSME space being now buffered up with the need to create more inventory. So that was one reflection I wanted to share. The other was actually the rapid adoption of digitization that we will not see a reversal of. So at HSBC, 77% of our transactions came through us from our clients using digital channels. This used to be in the mid 20% range a few years ago. We don't expect to go back. But that was only the use of digital channels. What we have to now answer here is how do we take that further to allow that digitization for SMEs to access more trade finance? And here are 6 or 7 points that I wanted to put on the table and we can discuss more. Firstly, MSMEs, SMEs don't necessarily choose where they trade. They often trade on their large anchor platforms or on third-party marketplaces. It is imperative that financiers are able to embed their solutions into such marketplaces and make trade finance available where SMEs trade. And that's something we've invested in a lot in connecting ourselves through APIs to different e-commerce platforms or marketplaces to make SMEs access financing. So I think it's a good direction of travel where technology has enabled that. The second is the KYC process and onboarding of SMEs is a massive obstacle and challenge, and very limited progress, I must say, has been made in that area. And the cost of onboarding SMEs is an inhibitor in being able to get financing. On a more positive note, I think banks have been able to, driven by fintechs, been able to embrace digital decisioning. So instead of pouring on financials, historic financials, we're getting better at looking at real-time data and being able to make credit decisions faster. And that's linked to the next point. You've heard a couple of the panelists talk about more visibility, making it safer and avoiding things like double financing that are quite important, right? One of the areas around blockchain, like Mahua spoke, we've invested in Contour, which is a global LC blockchain platform. And we have seen the over 100 customers and counterparties across different markets that have used this platform actually reduce the time for them to get financing or to close their trade from 5 to 10 days to a matter of few hours. So the benefits of digitizing and using electronic bills of lading, using distributed ledger to connect the different platforms is really very real, and we've seen that happen. I think linked to that point, as more customers move to open account financing, we must be cognizant that SMEs get less access or less avenues to gain finance because many of them take finance against letters of credit. So keeping the LC relevant or digitizing it is quite important. And the final point I would say is that a lot of clients now have realized they need to think beyond their first tier of suppliers. They do realize the sustainability of their supply chain goes down to the end supplier in their ecosystem. So how is it that we can use digitization and tokenization to make sure financing is available across the ecosystem? Thanks, Dipesh.
Thank you very much, Vinay, and some really excellent points there, and also I guess kudos to your colleague Krishnan on the IC Trade Register, who really brings up some of those points on the ICC Trade Register. I guess just and now into the main panel discussion. So with all of the panelists, and Vinay, going back to you. So you've talked about it from a bank perspective, but from an MSME perspective, what are the main reasons that MSMEs are often left out when it comes to access to trade financing?
Yeah, so I think, I mean, just to add on to the points that I said, I do think the ability for them to be onboarded by financiers or banks is a critical challenge. A digital identity, firstly a digital KYC and then a digital identity to trade is a significant obstacle. Of course, we know SMEs have financials that are still evolving. So often the lack of credit history or the lack of collateral in the traditional way of lending has been a obstacle. But as we use more digital assets, we use real-time data, we use AI and algorithms, we're getting better at looking at real-time feed and trying to solve for it. We do need to solve the digital identity problem. But I think what we must focus on here is the entry barriers for an SME to adopt some of these digital solutions. It's great to say that you can do digital decisioning and data, but how can they adopt some of these digital platforms? Do they have the right legal framework they can rely on without having to appoint legal counsel every time to look through contract law, which is what we now use in the absence of legal frameworks to do digital trade? Can they have an easier way to access some of these technologies, Dipesh? Because it costs a lot to interface to some of these platforms. Are there API toolkits that literally is like a USB plug and play to join some of these platforms? And progress is being made on some of these fronts. But these would be some of the principal issues, I think, that are primarily why MSMEs are left out of that trade finance kind of catchment.
Thank you very much, and we'll save the piece on digital identities, no pressure, Oswald, for your session later on today. Mahua, are paper documents the biggest problem, and what's your perspective from Infosys side?
So if we look at the trade finance, right, from the elements of finance perspective, so if we define it as 4 stages or pillars, you'll basically categorize it as request for information, financing, payments, and risk mitigation, right? Now, each of these process and pillars, if you look at what goes behind them, there's extensive usage of paper and operational process linked to it. That directly links to the cost and time taken for you to service a financing request. Now, there's been various market research itself which shows that the hidden cost related to this excessive exchange of paper documentation and manual process is close to about 2.7 billion USD, and counterfeit trade loss itself, which is related to risk mitigation, fraud detection, etc., is close to 600 billion. Now, all of that shows that paper has become the primary source of data in trade, and hence the need for moving from paper to paperless, which is what, as a platform, we've enabled the banks to offer to their end customers, whether it's a corporate or an SME, them to create their request on the platform itself, whether it's an invoice, a purchase order. If they don't have a proper ERP system, we've enabled them with APIs to integrate so that we can pull the data directly, by virtue of which the data is available. When it's shared, it's a single source of truth. We've also built in capabilities, like for instance, in India, there's e-invoicing system that's been come in, where every corporate beyond a certain value has to register them on it. So we are validating the invoices against it to ensure that it's a original invoice, no duplicate invoice capabilities have been built in on the platform itself. And the end-to-end financing request itself can happen on the platform with very minimal support required from the back-end trade systems that traditionally the banks have, where they're only referring it from a limit or the collateral perspective. So a lot of capabilities has been brought in order to see as to how do we reduce the dependency on paper, which is becoming a huge issue even after what we've seen now in the pandemic.
Thank you. And it's really interesting, India's e-invoicing solution, and a lot of potential there. And I guess, we should always ask the question, if it works for India, why can't we then enroll that out into other markets, like the UAE, for example? Zul, has COVID-19 meant the problem has got worse? And if so, how?
I think the problem for SMEs has probably gotten worse. Having said that, the central bank here and central banks all over the world put out a lot of help and support through the banking industry to ensure that borrowers could continue to have their liquidity. And in particular, trade finance is one of the avenues that has tried to keep up and to benefit from that. So I think what probably happened was that the larger corporates, the ones with the better credit histories, have continued to enjoy funding during this time. And probably those SMEs that had credit lines from before were again able to access those and maybe even to enhance those. But the ones who maybe wanted to enter the borrowing space maybe weren't able to do that during this period. So I think COVID, for those who were excluded, would continue to exclude them. But for the ones who were in the ability to borrow and to take finance against their trades, probably the problem didn't get worse. It probably stayed about the same. Just to pick up on Mahua's point, yes, definitely paper-based documentation is one of the hurdles. And if you didn't already have an established way of getting through a digital channel into your bank, the chances of you being able to start doing that during the last 1 year were probably less.
Thanks, Zul. So we've talked about paper, we've talked about identity, and we've talked about some of the legal issues. Idowu, is there also an education and awareness gap in trade finance when it comes to being aware of the fact that these financing products even exist for MSMEs?
Well, so it's a bit of yes and no, in the sense that the need for trade finance is not lost on pretty much every MSME that is in. However, there's obviously a need for greater education about the specific options that are available. Like the experts have spoken, from letters of credit through the more formal means, to open accounts trading, to even just good old, invoice financing, and more recently, creative AI, artificial intelligence driven financing options that are based on alternative ways of looking at, like I said earlier, creditworthiness. So yes, there's a lot of work that needs to be done, both by the ecosystem players like yourself, Trade Finance Global, and other organizations in the category, as well as the providers of these alternative funding options, right? To, put the word out there so that the MSMEs are fully kept abreast of the options that are available to them.
Thank you very much. Let's talk about scale, because it's clear that there are lots of things happening all around the world, but let's be honest, none of them are mainstream. And actually, Vinay, I'm going to start with you. How do we scale? How do we move from POC to mass adoption?
Yeah, thanks, Dipesh. So I think, the value proposition, and to your point, I think most clients understand the clear, tangible benefits of digitizing. I think for SMEs, without a doubt, a solid legal framework and the model law on not just kind of different standards of trade harmonization and harmonizing legal frameworks, but also negotiable instruments acts being converted into electronic form are going to be critical for them to kind of come on board and be comfortable with it. So I know there's a lot of good work that's happening in this space, but with everything, because it has to be enacted, there is a fairly long time frame from it. What we're trying to do at our end, kind of to address this, Dipesh, is to have rule books around some of the platforms that we're working with on the trade side, on the documentary trade or open account side, that help customers very easily understand what are the roles, responsibilities, what are some of the terms and conditions, and they can quickly kind of be onboarded to it. So while we wait for the model law to kind of come in place and be enacted across the board, we do have to have some solutions to take strides forward. That is one. The second one I referenced to was the technology entry barrier. And this is really important, where if a customer, and we know a lot of SMEs today use cloud accounting systems, right? Oracle, NetSuite, or they're on Sage or Tally or QuickBook or Intuit. How can we get these systems to quickly connect up with some of these trade finance platforms we're talking about, right? It cannot be a significant investment required each time, but there has to be almost an API marketplace where you can go and connect it to an app and get access to some of these trade finance systems very quickly. I think we're at that cusp now, Dipesh, of investing and seeing that scale. On a more positive note, we now have customers around some of the trade finance platforms we're working on that have now gone into what we call a repeat mode. So not just doing a proof of concept or pilot, but moving their entire base of counterparties where possible onto these platforms and getting repeat flows going. So it's still really a small percentage of the overall trade, but the fact that some customers are now moving their entire flow rather than doing just one pilot is a step in the right direction.
Thank you very much, and I'm going to jump straight into the chat, and there's a whole separate webinar that seems to be going on in the chat as well. So let's bring that to life. And Mohira, I'm going to ask you this question from a statement / question from Brian Gordon. Still seems like the digital document will have issues, i.e. discrepancies. So how is this making things more efficient? And quite important when we're talking about scale here. It sounds like we're missing standards about the actual documents themselves.
It's always an interesting question. What do you focus on, adoption or standardization? I think at this point of time, with the networks that are making progress, whether it's a pull or a push mechanism, either with the support of regulators or various trade organizations globally, I think at this point of time, we're looking at more in terms of how do you make the trade processes better. The way people are looking at standardization, I would say at this point of time, people are focused about how do you leverage the EUCP standards better. It still seems to be, not something that people have started to adopt against the UCP standards itself. Once we see that, and taking the point from Vinay that, as in more these consortiums, these platforms start opening it up to various peoples to be able to use and connect via APIs, so that they are well integrated and they don't have to go after a technology investment to actually streamline some of these processes. It ensures that people are then well connected and ecosystem play is effective. So from a standardization perspective, I believe that as soon as we see that there is some of these like the ICC, DSI standards, etc., being adopted, and we see the interoperability happening between the various networks, I believe that standardization around the digital documents will also take place.
Thank you very much. I guess very important balance there between adoption and scale versus standard. I think there's another part to play here, which is partnerships. And Zul, perhaps I can ask you, given the context, can partnerships between platforms and large corporates help accelerate financing to MSMEs?
I think they certainly can. But before I answer that, I just want to pick up on the question you asked to Mahua. It's within blockchain technology, there's something called a smart contract. So actually it lends itself perfectly to getting rid of these discrepancies, because the reason discrepancies happen is because one party's data is different to another party's data. So if you actually use either the inherent blockchain where both parties are posting to the same set of data, then there isn't a discrepancy. Or if you connect through a smart contract where the validation is happening within the blockchain, then you can easily siphon out the discrepancies from 90–95% of the trades, which are matching up perfectly. So I think actually the technology, once adopted, lends itself very well to getting rid of the discrepancies and removing the human element completely. So just wanted to add that. Now, coming back to your question, in the case of UTC today, the use case that we've done is where banks interface with the platform. But absolutely correct, in the future, when more and more corporates start interfacing directly with the platform, they will be putting their requests for trade finance, their invoice documents through the system. And that will lead to a wider ecosystem of users. And this at the moment might be limited to the UAE, but counterparties are in China, US, Saudi Arabia. So, there is a big question of scale that comes as soon as you start to enable corporates, or even better, when you say to corporates who have a large supply chain behind them that they should enforce the same platform or a combination of platforms, as Vinay was saying, so that everything is interoperable and everybody starts riding on the same bus.
Thank you very much. Now let's take a deeper dive into the technology, but I also appreciate that not everyone on this conference is a technologist. So let's try and take things back to the basics. And Mahua, I guess taking off your Finacle Trade Connect hat and I guess looking at a more overall approach, how actually is blockchain helping when it comes to access to trade finance, particularly for MSMEs?
Sure. So if we look at, we've discussed with a couple of financial institutions as to what have they seen in terms of, the real impact that's happening due to the pandemic to the, to their customers. And they came out with a very interesting observation. They said that during the pandemic, they noticed that whoever was able to offer better digital customer experience retained their customers. And as part of the pandemic, they saw a lot of them were restricted to offer large corporate loans and even financing to MSMEs, right? And this with, the capabilities, like for instance, in India, the regulator made certain changes to say that, the non-banking financial institutions could now start offer invoice financing to these SMEs itself. Now, with the aspect of that, the financial institutions now, both banking as well as non-banking, could offer this. So various players, the technology partners, started supporting the financial institutions to help them using either it's an AI, ML, or a blockchain. Various other technologies came into play to give these MSMEs the way, the access to get better financing. Now, if I look at the way we're doing it itself, and I'm sure there are many other players who are in some ways doing it, is that where SMEs can't find the right financial institutions, they are being brought on to a bid or marketplace, right? So the SMEs are matched to these financiers, and then they know exactly what their credentials, credit limits are, and they offer them that. Now, if they don't have any ERP systems, then they are connected via the invoice and PO systems on the platform, which is in many ways the templates, etc., created that they are industry standards itself. Now, there are auto eligibility checks that gets done on the platforms. So the financiers then look at it and offer auto financing. Many of the SMEs itself are offering their ledgers, etc., to the banks or the financial institutions, looking at which the banks itself are able to predict and say that yes, the capability for the SMEs to pay back on the financing is much higher, and these analytics are helping them to quickly finance them. So what we've seen is that now with all of this capabilities, etc., the MSMEs are to a larger extent getting about, with the right analytics capability, being showing that, their credit limits are proper, the payments are happening. They're able to get about 85 to 90%, on either invoice financing or invoice discounting, whichever they're getting offered at. And they're going faster in terms of the financing itself. So we're seeing them get a better financing now with the support of technology and the banks creating newer products around it.
Thank you. That's really helpful. Idowu, can you touch on any case studies that you're seeing in Africa around access to trade finance?
All right. So it's quite clear. Obviously, we've spoken about the need. A few of those case studies that jump out, would include Binkabi, which is a commodities exchange. Or rather, let me take it from the category approach first, and then speak about the specific players. So there are the commodity exchanges, which are solving the problem that we spoke about earlier of discovery, right? So your earlier question was about whether there is a gap between an awareness gap, right? And so there are these commodity exchanges that are plugging that gap, providing a marketplace, if you will. I use the word very loosely, that can connect our providers as well as our consumers of this service. Next would be the specific alternative algorithm-based finance providers, aka the one I spoke about earlier, PingMe, Karma Chain, a few of them like that. Essentially what they're doing, like I said earlier, is that they are taking an alternative approach to how to analyze and arrive at a credit decision concerning the MSMEs that, according to the World Bank, constitute 60% of Africa's GDP and 40% of its employment. So obviously those are some of the players that are visible on the planet. And perhaps, this is free public information, perhaps perhaps there is an opportunity for more discovery / what you might call awareness / aggregation / cataloging platforms. Because again, just to buttress on this question that you're asking, who are those that are active on the continent and what are they doing? That's a very big question, and it took quite a bit of research to dig them up. Thank you.
Thank you very much. And Zul, I'm going to come to you and actually with a question from the audience. Permission blockchains are a fine interim solution, but the eventual goal should be public, privacy-enabled blockchains, as permissioned perhaps implies barriers. How do you feel about this? And also, could you talk through in a little bit more detail about UAE Trade Connect's actual technology per your original slides in the presentation?
Okay, it's a great question. I don't know who asked it, but it is really a great question. So the UAE Trade Connect solution is based on a permissioned private blockchain. And I think Ido, being the Hyperledger expert, will tell you why that has lots of advantages. The nature of the use case is what should define the nature of the blockchain. So as long as you're trying to have a closed environment, then it makes sense to have a permission blockchain. If you are trying to have a super open environment, then of course a non-permission blockchain is the right one to use. It depends what the use case is. If you are in a marketplace for finance, by definition, it needs some degree of KYC. So permissions are important. I wouldn't consider them barriers. I would say it's a means of having a kind of filter around who gets to participate and who doesn't get to participate. I wouldn't call them barriers, but I do take the point that in a fully open environment, permission blockchains aren't the right one to use. Having said that, I think we're all in the infancy of this stuff, and Vinay is involved in so many of these networks. They will grow and they will start to interconnect, and we will end up, as Mahua said, with some standards ultimately. So in effect, it will become more of an open environment over time. I think we have to start somewhere, and given that we're talking about financing, it lends itself to some permissions.
Thank you very much, Zul. So the final section, let's talk about some of the current challenges and how we move forwards. And Vinay, I'm going to start with you here. And my question is around interoperability. I mean, HSBC works with Contour, with the Trade Information Network, We.Trade. Can blockchains interoperate?
Sure. So again, I'm not the technologist here, but I do believe they can. I just wanted to say one of the major use cases, the primary reasons for distributed ledger technology being used in trade finance is not so much as in the use of cryptos or the like. It's more for the fact that you have different industries, shipping, banking, customs, ports, regulators, having to come together to work on a single software where the data is democratized, as in everybody owns their own data, right? Now, it's slightly different than kind of Bitcoin, where you have a value transfer happening for a particular currency. I am being told by the technologists that in a way does make it slightly easier to interoperate at a technology level across some of these networks. But if you look back at the different industries, right from whether that's the media or internet protocols or browsers, technology interoperability has always been solved for. The challenge is the business standards to help drive that tech interoperability. But so when I speak to my engineering teams, their answer is not, don't come to us saying solve for the tech problem. First solve for, do you have business standards, right, that allow for the standard governance of documents or the formats of documents or data attributes. So the work being done there by the ICC around the uniform rules for digital trade transactions, and I'm sure Oswald will talk about it on DSI, Digital Standards Initiative. This is going to be critical to create that foundation, Dipesh, to get the basics right around how various documents or data assets across these networks are being governed and stored. I think the technology part of bringing them together is relatively going to be an easier challenge, and certainly has been solved for in other industries when you look back.
Thanks, Vinay. And I'm going to quote you on that. Interoperability is not the problem. Business standards and standardization are what needs to be addressed. And I'm sure Oswald will cover the uniform rules for digital standards later on today. I'm going to ask a question from the chat, so open to whoever wants to answer this. Do the panelists believe that M-Letter, which is the model law on electronic transferable records, conforming digital original negotiable instruments like those being enabled by many solutions, I think they've mentioned Inigio's Trace Original here, can they help bridge the interoperability drive and help drive adoption among different stakeholders like banks, SMEs, supply chain logistics companies? Who would like to take that?
Sure. So maybe I can, and I think it refers to an earlier question as well, right? I think, Dipesh, we're never going to get straight away to the ideal end state solution where the data is completely tokenized in its perfect formats. We fully recognize that with any solution we do, whether it's on Contour or We.Trade, we have to live with a stage where there are going to be, for example, scanned image of documents that you work through, and then maybe use OCR and AI to pull the data out. So absolutely, we do believe that there will be many bridge and interim solutions that we have to support in any model we have. So on Contour, we've done purely 100% digital solutions where even the BL has been digitized fully. But then we've also done hybrids where some parts like the invoice or the packing list or certain certificates have been digitized, but the BL is still physical, but it's just been scanned through on the solution. So I entirely agree with that has going to have to be a way to drive scale. We have to have hybrid solutions.
Thank you very much. And just with regards to MLETR, I note that this will be discussed in greater detail in this afternoon session, in session 5. I guess, Mayua, I guess looking forward and taking a bit of a forward-looking view, what needs to happen?
So we are seeing that, you know, more and more it's evident that blockchain is a very right solution for for trade finance itself. If you look at, as I called out, the 4 pillars itself from a trade perspective, whether it is the request for information, whether it's the financing, whether it's fraud, all of this together, you know, if something has to be addressed for trade finance, it is basically the usage of blockchain technology. More and more of this, you know, the awareness of how it's actually helping, whether it is from a trade finance perspective or identity management perspective, where, you know, you can even look at the fact that you could onboard the corporate directly, while, you know, the current pandemic situation has led to the fact that the traditional way in which corporates interact, especially in India, where they either walk up to a branch or, you know, they have a representative who carries the documents for them. All of that is now being looked at as to how do I do this digitally. So it is becoming evident that digitization is important, and, you know, as the awareness increases within the banking organization, so that their internal approvals become faster for digitization of various processes around trade finance, and the support that they should get from regulators' perspective, whether there's changes in terms of, you know, the in terms of acceptance of the electronic versions of the paper documents, because still there are a lot of countries where regulations are yet to be amended to support the e-version of the documents itself. So the support from the government and the regulators is only going to help making this entire journey much easier and adoption much faster. So I would say that yes, those 2 areas are very important.
Thank you very much. And Zul, perhaps I'm going to come to you on this question to the panelists from James. Can governments collaborating to bring coherence to single window data sets for customs clearance help drive this standardization piece that will potentially enable blockchain interoperability?
Yes. Yeah, I mean, the short answer is yes. I think governments have a role to play. Customs authorities will probably lead the way and go talk to their governments about what should be the standards. I think technologists have a role to play. And I think the WTO, since they're our host, and the ICC definitely have a role to play, because it's these standards that will allow things to be to work together and to smoothen and shorten the trade cycle.
Thanks, Zul. So very conscious of time, and I want to do a very quick 3 or 4 minute wrap up. So I'd like to come to each of you, fantastic panel, to give a bit of a future looking perspective. What's your 1, 5 and 10 year view? Idowu, let's start with you.
All right. So forever the optimist. Despite the huge challenges, that face the developing world, Africa especially. 1 year outlook, I'd say we'll still be in this, using Topman's model, this formative stage, quote unquote, meaning that innovators will still launch new ventures, currently launched ventures will still try to find their feet. 5 years down the line, perhaps we'll start to see a little consolidation between a few of them. At a few places where I've had the opportunity to speak, I've suggested that sometimes consolidation may bring bigger benefits to each of them. So perhaps we'll see consolidation and greater stability in terms of value for the end users. In this case, the businesses, the small businesses that need access to trade finance. And in 10 years, hopefully we'll have a better image of Africa, circling back to that very first image that I painted at the beginning of my presentation, that perhaps we'll have a better image of Africa in terms of not necessarily synonymizing Africa with poverty, lack, and that kind of stuff. Thank you.
Thank you. Mohiwa.
So at the end of the day, the reason why the banks and the corporates have come together is because they want to grow their business. So our immediate 1-year plan is to how do we support their growth in business. Our next term plan is basically how do we make interoperability work. And when we say interoperability, it's just not about the consortiums, but also how do people forget about the fact that the underlying DLT is a Hyperledger or Corda or whatever technology they're using. So it is end-to-end interoperability. And hopefully by then we would be able to think and focus upon standardization.
Thank you. Vinay, over to you.
Thanks, Dipesh. So just, from a look back, I think if you ask the same question from a 1 year back, 5 years, I think a lot of progress has been made in terms of learnings around the technology, around legal and handling the data, etc. So we're at a much better place. I would say in a 1 year time frame, we expect to see more customers, like we said, using repeat business flows, more SMEs accessing financing, more tech solutions coming up with API capabilities to connect to some of these platforms, but most of it's still working on a contract law or rule books. I think it'll take us to 3 to 5 years before you start seeing a completely harmonized legal framework enacted in every country and having convergence across the technology platforms where, like Moa said, no one really needs to care what platform you're working on. I think in 10 years or hopefully sooner, we need to take this dialogue to how the better data, the better visibility, and the better use of digital reduces the risk in a transaction, reduces the risk premium and the capital that is consumed towards this, because that in itself will encourage the financiers to lend more towards SME financing. And hopefully it doesn't take 10 years for that, but shorter.
Thanks, Vinay. Yeah, I couldn't agree with you more. Distinguishing good risk from bad risk is incredibly important. I'm sure Michael Vrontomitis will be talking about that later on today. Zul, over to you.
I'll start from the 10-year view. I think in 10 years, nobody will believe that we ran a trade system the way we run it today, with pieces of paper. I mean, honestly, when I started this job, I was told that there were still companies that use a fax machine to get documents validated by their counterparties. So, I mean, I was blown away. So I think the milestones to get there, the 5 years, definitely, I agree with both Vinay and Mohiwa. And 1 year from now, I'm a little less optimistic. I think people will still be fumbling around the way we are, and everybody working in their silos and trying to do their little bit of technology. But over 5 years, it should coalesce. And between 5 and 10, I think the legislation changes.
Thank you very much, everyone. Idowu, Mohiwa, Zul, Vinay, fantastic panel session. Now, I ask you to stay for 5 more minutes and Emmanuel to join. It's now 1 o'clock CET, which means we are delighted, Emmanuel Gan and I are delighted to now announce the launch of our latest publication, Accelerating Trade Digitalization to Support MSME Financing. It's a joint publication by the World Trade Organization, Trade Finance Global, and the International Chamber of Commerce. This new publication, which is co-authored by Emmanuel Gan and I, dives into the benefits and deployment challenges of 8 prominent technologies that have potential to disrupt international trade and facilitate MSME financing. Digital technologies open significant opportunities to lower cost of service and facilitate MSME access to financing, but their deployment does not come without challenges. And there are several reasons that are commonly put forward to explain why MSMEs, particularly those in developing nations, struggle to obtain financing. And these reasons, to our discussion earlier, include greater risk profile combined with MSMEs' lack of additional collateral and of the formal documentation required for financing. There are also additional complexities for MSMEs when it comes to financing cross-border, such as lack of awareness and financing opportunities and proportionally high cost to service MSMEs. This image illustrates the complex interplay between digital technologies and demonstrates how each technology relies on the capabilities of others to deliver its most powerful benefits. Some of them work to collect and deliver data, others analyze and interpret this data, and still others provide the infrastructure which allows this communication to occur. So if we take, for example, the role of IoT, Internet of Things, in this relationship, IoT devices and sensors on their own provide pretty minimal value. However, when they're combined with the secure transmission capabilities of DLT and the analytical capabilities of big data analytics tools enabled by artificial intelligence, they are able to deliver meaningful and actionable information. To better understand the role that digital technologies play in trade financing for MSMEs, we conducted a survey of 105 industry professionals and qualitative interviews with 34 industry experts. As shown by the chart on the left, each technology has been individually identified as either a lucrative challenge, a rapid reward, a small win, or a downstream ambition on the basis of the survey responses. And the positioning of these technologies within these quadrants help to depict visually where developmental efforts should be focused. The study also highlights that in light of the COVID-19 pandemic, going digital to support MSME financing is no longer optional, but necessary. And this desperate necessity for paperless workarounds has set the industry, of course, on a digital course. And on the right, we show the 8 technologies that have complex interrelations with one another and with the trade products they serve, and acknowledging that any visual depiction is likely to oversimplify these relationships. This technology stack depicts how each technological layer can be used to facilitate and enhance the layers above. The publication notes, however, that digitalization efforts are hindered by various challenges. And whilst each technology comes with its own set of challenges, there are common threads, such as the cost of deploying some of these technologies, the lack of standardized data models, the procurement of quality data, which is a particular challenge for analytical technologies, as well as issues related to data ownership and its legal admissibility in case of litigation. Another challenge faced by practitioners in the field concerns the difficulty to convince customers to share data automatically to provide relevant services, and thought should be given to the development of common framework on how to leverage data at all stages of the trade technology stack to better assess financing risk and give comfort to customers. Finally, regulatory issues are often mentioned as a challenge. Emmanuel, if you want to take over and I guess summarize some of the key conclusions from our white paper.
Yeah, thanks, Dipesh. So the publication highlights the need for a multi-pronged approach to unleash the potential of digital technologies to facilitate MSME trade financing. So first is the need for the development of globally accepted standards to remedy the digital island problem. Second, developing a common framework for leveraging data to better assess financing risk. Third, creating an enabling regulatory framework that recognizes e-signatures and e-documents and is in line with the UNCTRAL model on electronic transferable records. And we've already discussed these issues and they will be discussed in greater detail also in session 5 today. Fourth, a strong need for a trusted global digital identity system for companies, and that will be discussed in session 4 today, so in the afternoon. And fifth, accelerating digitalization to support MSME financing requires an acceleration of efforts to bridge the digital divide, to allow all MSMEs, wherever they are, to benefit from the opportunities that digital technologies can offer. In addition, for MSMEs to take advantage of these new technologies being developed, there is a need, of course, to raise awareness about the opportunities and solutions being offered. So we note in the publication that no stakeholder has the clout to effect this change alone. Industry, governments, financial regulators, and international organizations all have a key role to play in this regard. Policymakers, technologists, practitioners, bankers, and all other stakeholders must work together to devise and agree and then execute a roadmap that will catalyze action and lay the foundation for the digitalization of trade and for the digital technologies discussed in this publication to have a potentially transformative impact on MSME financing. So the publication should now be available on the WTO, TFG, and ICC website. So I hope you will enjoy the read. And let us now close this session. And I would like to extend my sincere thanks to the panelists for a very rich discussion on a topic of the utmost importance for trade and in particular for small companies. So we've now all deserved a break, lunch break for those based in Europe. The event will resume in a couple of hours at 3 p.m. CET. And the first afternoon session will be dedicated to the launch of a new online course that we've developed jointly with the International Trade Center on blockchain for trade. So see you in a couple of hours. Thanks a lot.
Hello.
Hi, Oswald. Actually, I had muted you, but that's okay. I mean, there are still a few attendees from the morning. So it seems to be fine. I saw you briefly. I hear you. I see also Michael. So let's turn our cameras off and sound off. If there's anything, you can send a message via the chat to all panelists.
Just checking you can hear me.
Sorry, who is speaking?
I believe it was Luca. Can you hear me, Emmanuel?
Yes, now, yes.
Okay, I'll mute my mic now. Thank you.
Ja, jeg skal lige have styr på min her, hvad jeg har i gang her.
Hi, Emmanuel.
Hello, Luca.
Yep.
It's very soft. Can you increase the sound a little bit?
Hello. Hello.
Hello?
Yeah, hello.
Yes, hi.
Is it
Yes.
better now?
It's a bit better, yes. I think it should be fine.
A bit better or not yet there?
It's almost there. I think we can do with that volume if you can't increase it any further.
Okay, I can keep it like this, or I can switch to the telephone.
No, I think that should be fine like this. Just make sure that you speak a little bit loud so that we're sure to hear you well.
Okay, thanks.
Right.
Hi, Emmanuel. Just wanted to check, is my volume okay as well?
Yes, it's perfect.
Okay, great.
And this is Chris. I'll check as well.
That's perfect. Thanks.
And this is Oz.
Perfect as well.
Is this one any better?
I think it's enough, Luca. Yeah, that would be good enough.
No, because I changed the microphone, but
yeah,
maybe not really.
It's good like this. Yes.
Okay, I keep it like this. Thanks.
Okay, great.
It's not as good as Oz's.
That didn't sound like Oz at all.
Sorry? I'll provide a French and Spanish translation.
Great, so let's get started. I see that there are a few more people coming in, but it's already 3 past. So welcome back to the Global Trade and Blockchain Forum. I hope you had a nice lunch break, at least for those based in Europe. So let's now move to our 3rd session of the day. So I'm delighted to announce that we'll be launching an ITC WTO online course on blockchain for trade in the coming weeks. The course was jointly developed by the International Trade Center and the World Trade Organization. And I'm very grateful to the ITC for their collaboration on this project and for their support. Now, without further ado, let me turn to Craig Atkinson, who has played an instrumental role in giving life to this course and will give you an overview of what the course will cover. So Craig is a certified international trade professional, the founder and director of Lex America International Trade, and a consultant with the ITC. He's also a fellow with Stanford Law School and a regular contributor to the agendas of the World Trade Organization's Enhanced Integrated Framework and the World Economic Forum's Inclusive Growth Framework. So Craig, you have the floor.
Thank you, Emmanuel. And thank you for your efforts in organizing this event and for the WTO for hosting. And I also want to say thank you to everyone watching today. And a special shout out to Adam David Long, who apparently got up at 6 a.m. California time to attend. So yes, I'm pleased to announce the upcoming availability of a new online course from ITC and the WTO called Introduction to Blockchain for Trade. And so today I'll be providing an overview and details about the course. So if we can go to the next slide, or should I share my screen? Okay, great. So firstly, I'm going to identify a major challenge that the course seeks to address, and then really the main reason for its creation, why an e-learning course. Secondly, I'll discuss the background behind the development of the course. How did it come to be? I'll then outline the target audiences as well as the e-learning platform options to take the course. Lastly, I'll cover the course structure and then provide a sneak peek on some of the e-learning content and give some details on upcoming availability and registration. So we identified a major challenge that the course seeks to address, in that there are a lot of resources on blockchain, but many people find it difficult to grasp and or understand the value of the technology. And this is especially true when considering the international trade context. There are many statements for and against the use of blockchain and DLT in trade. Sometimes it might seem like blockchain is everything and the kitchen sink. So we kind of realized we needed to address this issue. So the technology is only appropriate in certain contexts, and especially those that involve trust. Therefore, to provide a solution that was more active than many of the text-based resources, we decided to develop an online learning course. So in terms of course development, I've been involved in ITC internal discussions on blockchain since around late 2016. And these conversations advanced significantly in 2018, especially after meeting Emmanuel for the first time at e-commerce week in Geneva. Later that year, Emmanuel published "Can Blockchain Revolutionize International Trade?" And this sparked the idea that leveraging some of the book's content could be used to create an e-learning course. And so starting in 2020, everyone's favorite year, we began developing the course using ITC's pedagogy that focuses on simplicity and practicality. Lastly, early this year, we shot videos for the course modules and interviews on blockchain for trade use cases with both experts and practitioners. So in terms of the audiences for the course appeals to both technical and non-technical groups. So this includes trade and IT professionals, as well as service providers, micro, small, and medium-sized enterprises, MISMEs, both users and developers, policymakers and regulators that are considering a role for blockchain technology. And so when the course is available, I'll speak to that in a few minutes. There will be two different options. So the first option will be taking the course through the SME Trade Academy platform, ITC's platform. With this option, the course will be time-bound, meaning it will have to be completed within 2 weeks, and it will take about 4 to 6 hours each week to complete. The editions of the course will be offered on a cyclical basis. At the moment, we're thinking it's going to be approximately 4 editions per year, and it's likely that I will be the tutor for these various sessions. And the special thing about the SME Trade Academy approach is that it also includes an online discussion forum that will allow a cohort to interact with each other and answer an open-ended question about how they think blockchain could be applied in international trade. And then the second option is the WTO e-learning option. So through their platform, there will be no time constraints to complete. You'll be able to register at any given time. The only difference would be that there will be no cohorts specifically, meaning there will be no online discussion forum. So overall, the course is going to include 4 modules and a final case study. This relates specifically to the ITC SME Trade Academy's pedagogy. What we do is we put the question of why first. Many times we'll find that an e-learning course elsewhere will put what first, or maybe even how. But the reason why is important to have up first is that, especially for a technology like blockchain, if you understand the why, you may realize, does this even have value to me? So we start with the why, we then move on to the what, or what is blockchain technology. We then discuss, and most importantly in relation to trade, how blockchain can be used in international trade. Module 4 covers implementing blockchain for trade. And then to complete the course, participants will have to pass a final case study exercise that will be based on a hypothetical use case for blockchain in trade. So I'm also going to provide today a sneak peek on the course content. The course covers a variety of topics. So it does everything from distinguish between Bitcoin and cryptocurrency versus blockchain, what the difference between blockchain and distributed ledger technology, or DLT, is. It also discusses the features and the functions of blockchain, namely smart contracts when it comes to functions, and other parallel technologies such as IoT, the Internet of Things. Importantly, and a key distinction that needs to be made in this course is the difference between digitization and digitalization. Digitization is typically used to refer to the actual conversion of analog to digital, whereas blockchain actually leverages these digital forms data through process automation and other approaches. So moving on from this, we actually get into the specifics of blockchain use cases for trade. And this includes expert and practitioner interviews, as I mentioned before. So these use case areas include digital ID, supply chain efficiency, transparency, transportation and logistics, intellectual property rights, trade facilitation. So broadly, we include that as customs and border procedures, but as well as customs documentation. And then lastly, financial services, and we cover cross-border payments, trade finance, and other areas. And near the end of the course, we actually get into the implementation side. So we look at the blockchain for trade ecosystem. In this discussion, we touch upon the importance of standards and also about open source and other communities and their role within the development of blockchain for trade. And we also discuss the regulatory and legal requirements that blockchain presents. So for example, and this will be discussed in the upcoming session, the UN Citral model laws. And then we conclude the course by looking at some of the other remaining challenges. These are both the technical challenges, such as scalability of blockchain, but also the more developmental challenges, such as access to technology in general, such as device technology, or to a stable and high bandwidth internet connection. So, okay, this is the older version of this slide, but I will share the link to the upcoming registration for the course via the SME Trade Academy. So what you'll be able to do in the first instance is register for the course before it's made available. And then when it's made available, it will be available for registration on both ITC's platform as well as through the WTO. And we will make announcements through the social media channels as well as via email regarding this upcoming launch. So we're excited to announce this upcoming course today, and we look forward to people continuing the journey with us that's been going on for some time now, and learning a lot more about blockchain and distributed ledger technology for international trade. Thank you.
Thank you very much, Craig. So stay tuned. We will communicate again, as Craig said, on social media when the course is officially launched. And in the meantime, you can register for the first session organized by the ITC. They will communicate the link very shortly. So as noted by Craig, the course can also be taken at any time through the WTO website. Now, let's have a very, very short break, just a couple of minutes to allow the speakers of the next session to come on board. Thanks again, Craig. And so don't leave us. We'll see you in 2 minutes for a discussion on digital identities, which is a topic that was touched upon in the morning, and we have a very exciting panel. So see you in a couple of minutes. Okay, so we now have all our speakers. So welcome back, and let's kick off the first session of the day, which is entitled Digital Identities. Why do they matter for 21st century trade, and what does DLT, so distributed ledger technology, mean for digital identities. And with top-notch experts for this session that will make us dive into the world of digital identities and why digital identities and identifiers are important for international trade. It's a topic, as I just said, that was mentioned this morning already. Now, Oswald Karler will moderate the discussion. Oswald is the managing director of the ICC Digital Standards Initiative that was launched a few months ago. And he's also the former head of data strategy at BHP, which is the world's largest diversified mining company. He's worked on initiatives covering blockchain, electronic documentation in trade, data and analytics, and automation. So over to you, Oswald.
Thank you so much, Emmanuel. What a privilege it is to be hosting this panel today. I want to welcome everyone to what I believe is going to be a very informative session. For this segment, we'll cover a very foundational topic, digital identities and why do they matter in 21st century trade. It's a central topic that means many different things to many different people, and it's easy to get lost. The technologists in me think about standards like ISO 24760, which articulates a set of attributes for digital identities, or even the W3C's DID specification. When I put my trade hat on, I think about all the other identities that we see externally, from the WCO's TIN, SWIFT's BIC, Glyph's LEI, and the list goes on. It's easy to feel a little bit overwhelmed by all these acronyms, yet they enable trillions of dollars of trade today. Now, the good news is we're only at the starting point. There are still many, many more identities and identifiers that are required for both subjects and objects, companies and transport, to enable all of the additional value that's out there in the world. So today we're going to take you through a little bit of an accelerated journey. We're going to talk about what they are. We're going to talk a little bit about what the value is. We'll talk a bit about the landscape and the diversity in that, and finally get a little bit of a call to action at the end. Friendly reminder, we have a Q&A section at the end of the actual panel. So if you have any questions, please do raise them. Preface it with the word question. It's easier for me to pick them up, and I'll definitely make sure we include those at the end. So without further ado, let me introduce our fantastic panelists. We have Chris Bellinger from Mobi, who's joined us today. Thanks, Chris. Nadia Hewitt from the World Economic Forum. Nadia, it's a privilege to have you here. And Hendrik Jensen from ATR. So thank you all for joining us. Thanks to the audience. Raise your questions and let's do this. So I'm going to start off the first question, Hendrik, by pulling you into the conversation. So Hendrik, from an audience perspective, again, digital identity can feel very challenging to truly understand what it all is. Can you give the audience a macro level view of what it is and what it covers? Over to you, Hendrik.
And thank you very much, Oswald. And I will try to do that in a few minutes, as we talked about. So, but basically, I mean, next slide, please. No, this is fine. Sorry. I mean, in Denmark, we had a digital identity and a digital signature for citizens, businesses, and government agencies for almost 20 years. I mean, when we have seen how important this has been for efficient digitization and streamlining of the Danish society, it is actually fairly frustrating when you come behind the curtains in global trade to see how costly it is of not having a similar opportunity for global trade. I mean, it has implications on the poverty in the world and on implications on cost and risk for anyone involved in global trade. So what I promise here, the purpose of my 5 minutes here is to give an overview of what is a digital identity and a digital signature, and why is this a foundational prerequisite for efficient digitization of global trade. I mean, I will argue that without a common digital trade identity and a signature, we will never be able to harvest the full benefits of a digital global trade. We will be not even close to do that. Next slide, please. It is fundamental in any relationship that you can prove your identity and that you can trust the other party's identity. And it's even more important when you're in future global trade, where the number of digital connections will increase dramatically,
and your digital global trade ecosystem continuously be adjusted dynamically. I mean, your digital capability needs to be prepared for that. So if we look at what is a digital identity, this is what the slide shows here. I mean, it's a digital equivalent of a person's or an entity's real identity. So it's so you have obvious have an identity in the real world. It's used for identification of digital transactions and the connections you have. You may think of this in terms of a user ID and password on the home page, but the main focus on what we're talking about here is system-to-system interactions, where your IT system communicate directly with other parties' IT system, and both IT systems are able to verify the identity of the entity the IT system is acting on behalf of. I tried to illustrate a digital identity on the right. It is actually fairly simple. The important part is that there exists a third party that both entities trust. This can also be a friend of a friend concept where you trust a local party and you trust what this local party trusts. So it's one single global trusted party for all of global trade. It's not necessary. We can have local parties involved as well. The important thing is that you trust that third party, that the third party has verified and continue to verify the identity and relevant credentials for each party. The trusted third party then issue a digital identity, and during an interaction with your business partner, you present this digital identity to the other party that can ask this third party to verify this identity. This is how digital identities work, so it is actually fairly simple. Next slide, please. A very critical part of a digital identity is your digital signature. It's not enough to tell who you are, but actually also be able to sign documents and transactions, to digital sign documents and transactions that can be handed out throughout the value chain. Also, the digital signature concept is actually fairly simple. In this example here, we have an exporting authority that needs to sign the trade document. It could, for example, be in a certificate of origin. The way the digital signature works is that you first, a unique code is calculated of the document, of this trade document, of the certificate of origin. It is encrypted with the export authority's private key. You then send this to the importing authority in this example here. The importing authority decrypt this unique code with the exporting authority's public key, and then recalculate the received document's unique code. If the decrypted and the recalculated code is the same, you know the document hasn't been changed. So it is fairly simple. Of course, there's a lot of very advanced mathematics behind, but the technology is ready. Next slide, please. So it's also important to underline that a digital signed document is significantly more secure than traditional paper-based signatures. I mean, it is way more secure. You cannot forge a digital signed trade document. The validity of the authorization is verified immediately by your IT systems. You can use it in both government to government, business to business interactions. And when you receive a digital signed document, and actually it doesn't matter who actually gives it to you, but when you receive this digital signed document, you can verify that it has been issued by an authorized agency, that the document hasn't been tampered with, and that only authorized entities has access. All this is given to you by the digitization. Next slide, please. So global trade requires interaction between a lot of different parties that is often assembled dynamically. For example, during the investigation for emerged trade lanes, we identified that more than 20 entities was involved in a container transport. It is costly, takes time, and increased security risk if you need to have a separate identity per service provider, and the digital signature cannot be globally recognized. The only way to enable efficient, trustworthy global trade is by implementing a globally recognized digital identity and signature that is used in global trade. Next slide, please. So in order for realizing a true global identity, I work with Nadia from World Economic Forum, that is also on the panel here, on how can we design this one here. And this is, and you can find the details in the document. We identified a number of principles for enabling global interoperability while preserving the political and competitively neutrality. I highlight a number of principles. There's more in the document, but basically, the important is that you need to be able to decide yourself how much trust you put on the presenter identity and signature. It cannot be a third party deciding for that one. Also, the control of your identity must be with you. You cannot again have a third party controlling your identity. We of course also need to accept there is different jurisdiction around the globe. So again, each jurisdiction can decide how they would trust the presented identity or credentials. We also need to make sure that the cost for participation must be limited, and we cannot give the power to a single organization to control the infrastructure. So this is also part of the governance and the design that a single organization cannot control the infrastructure. Next slide, please. So thank you very much. I hope I've given you an understanding of why global trade identity is foundation prerequisite for efficient digitization of global trade. And also that the technology is ready, it's actually well tested. Basically, next step is just to make the decision and start now. Thank you very much, Osman.
Thank you so much, Hendrik. I want to pull in Chris from Mobi. So I think, Chris, for a few people, it's quite easy to think about identity and think about people and think about companies and correlate the two to each other. Can you potentially help the audience to understand, for example, the identity of things and where that comes in, and specifically a little bit more about what Mobi is doing in that space?
Thank you. Thanks for the opportunity to be here this evening, or this morning, my time. So we're all familiar with identity and its role in allowing people to access things that they can't access, right? It's a human identity, a secure human identity that gives them access to the banking system, allows them to own property, participate in the economy, own a business, and maximize their human capital. It's similar for things. Things which have identities can have the identity can act as an anchor to other very valuable data, and that valuable data can help solve the lemons problem, the problem of asymmetry in information in marketplaces that make markets less efficient and destroy value. A digital identity for a thing can turn almost anything, can give almost anything a lot more value. We've seen it recently with the NFTs. Now, maybe that's NFTs as non-fungible tokens, which have taken digital files for artwork, right, and turned them into multi-billion dollar digital attributes and assets. We've seen it with Bitcoin, but potentially with anything, you can give it a digital ID and turn it into a bearer instrument and give it value. And if the thing is smart and connected, you can turn that physical thing into a participant in the economy, right? An IoT device, which is smart, has a certain requisite amount of intelligence, processing power, can begin to transact on its own. In fact, so the convergence that we're seeing of blockchain, of AI, of IoT, right, allows any smart thing to have an identity and to begin to participate increasingly autonomously in a transaction economy. And that is something I think that is going to revolutionize a lot of industries, including supply chains and global trade.
Thank you so much, Chris. That really helped. So what I want to do is I want to transition a little bit over to Nadia. We've just spoken a little bit about the identity of objects and subjects. Nadia, when I think a bit about the diversity of audience members that we have today, we have everyone from policymakers, trade officials, executives at companies. And I wonder if you can help, now that we have a sense of what identity is, give people a view on basically why it matters, what's important about identity and what's an offer for them, and maybe specifically for policymakers and trade officials.
Yes, thank you, Oswald. Hey, everybody, lovely to be with you. So the whole world lived
the last week through the realities of supply chain disruptions that international trade entities faces quite regularly. And I'm talking about the vessel that was stuck sideways in the Suez Canal. Disruptions this cause should unfortunately be too familiar to policymakers and trade officials, right? There is fog in the port of Savannah or port of Shanghai, the COVID-19 pandemic causing disruptions. There are strikes in Montreal or other ports. Importers and exporters need to rely on alternative and many times new vendors and suppliers overnight during times of disruption. This is where policymakers need to develop new ways to promote trust and agile supply chains to sustain trade and mitigate such disruptions. Global trusted digital identity systems can be the key to unlock the trust and agility that is essential to make international trade resilient. This is, of course, not only important during disruptions, but it is also essential for day-to-day trade activities. If I had to summarize just real quick what Hendrik and Chris introduced, it really comes down to the fact that identity and trust lie at the core of each trade interaction, right? So we want to be able to answer questions like, what suppliers can I trust? Are these new vendors compliant? Do these suppliers meet KYC and anti-money laundering requirements? We want to be able to answer these questions reassuringly and in an effective manner. So really, as transactions and deal making is becoming more digital, trade entities need to efficiently link that digital identity to a real organization and do it in a way that's agile and effective. So as trade officials, also, and policymakers are rethinking processes and trade agreements relevant to digital identity verification, I think the question, also this being a blockchain forum, the question that comes to mind is, what can blockchain bring in particularly to small and medium-sized enterprises? SMEs have come up quite a bit in the last few hours or today. The thing is that supplier verification processes, so digital identification processes, are currently performed in centralized silos. Different public and private solutions, they record, maintain, and verify identity data, and they do it potentially hundreds of times over. These are not interoperable, and it's creating a significant amount of redundant identity information and just, duplicative efforts. This is a waste of resources for all parties involved, but it is also error-prone, paper-heavy, and it's difficult to scale. And this creates specific challenges for small and medium-sized enterprises. It's a lot more costly to them. Think about it. The same process, the same information, the same cost that an SME has to go through every time they do a supplier verification is the same that a large exporter goes through. So clearly, SMEs are at a disadvantage when compared with more regular, reputable brands as far as conducting trustworthy supplier verification processes. So for trade officials, helping them to reduce red tape when doing business abroad by streamlining such costly digital identity verification processes empowers SMEs to have more agile responses to business opportunities. And then I'll just lastly say the advent of blockchain technology, it has opened new opportunities to improve and rethink and reimagine these digital identity systems. Because of blockchain synchronized and tamper-proof characteristics, blockchain can help to enhance trust, but it also enables the decentralized holding of information, unlike the traditional databases, if you think about digital identity. So really, I would say, first and foremost, improved digital identity systems is key in supporting SMEs.
Thank you so much, Nadia, and that really helps. And to build off what you've just shared with the audience, I wonder if we can bring Hendrik back. So Hendrik, Nadia touched a little bit on the business side of things too, and the impact from a cost perspective, etc. What's your take from a business landscape point of view? Why should business executives worry about digital identity?
I would say, I mean, it's three things, or perhaps four things, but it is saving on cost, on time, and on risk, and also basically to remain competitive. I mean, if you look at the cost, for example, McKinsey reports show that the financial industry will save something like $2 to $4 billion on what is called the Global Legal Entity Identifier, the GLIVE. But basically not having to register, protect, and maintain the identities registered in your IT system, as well as the identities that you are registered under other companies' IT system, will be an enormous cost saver and will increase security. I mean, you only have your identity placed one, you only have your digital signature in one place. I mean, when I left Maersk, we talked about having something like 50,000 foreign identities registered. This has probably increased significantly. But this is similar numbers for anyone else involved in global trade. This is a considerable hidden trade cost, as Nadia has also talked about, that can be removed. And if we look at the time aspect, I mean, setting up the identity of a new digital customer today can take weeks or months because you need to make sure this really is the right person, etc., or the right company. Now it's done immediately. Also, you're removing or at least reducing a complex activity when you develop new IT systems that need to interact with the ecosystem. And also when we talked about the risk, I mean, you know, and you're confident that the identities and digital signature that is presented to you are protected with world-class security. Both your identity, which is obviously important that is protected, but also your business partners. So you don't have to rely on a business partner to protect your identity properly. You control your own identity. And also competitiveness, I mean, to me, I cannot see that you can do business in global trade without having a digital identity and a signature. Because, I mean, we are in a world of digital interaction. I mean, you need to reduce the hassle of interaction digital with you. So if a business partner can do immediate digital interactions with you, where it takes several weeks to set up a competitor, you get the business. So basically, I would say doing it now will benefit you today, but it's also preparing you for the digital future.
Thank you. And I must say, I fully agree with you. I don't know how businesses stay competitive if they actually don't own the digital identity journey. And I don't know personally how you reach any of your KYC, KYS objectives without going down that path. No. And so I want to bring Chris from Mobi back. And for those of you who don't know, Mobi is the Mobility Open Blockchain Initiative. And Chris, you've actually worked on an identity standard. So I think it'll be really good if you can give us a view of the business case and some further insight into this whole identity process from your perspective. Chris, you're on mute.
Thank you. This early in the morning, it's hard to remember those little things. Thanks. Yeah, Mobi is a nonprofit consortium that includes some of the world's largest automakers, big tech companies, lots of startups, governments, academics, and has upwards of 100 members now, roughly equally split between Asia, Europe, and the Americas. It's very focused on digital IDs and applying blockchain distributed ledger to transportation to make transportation greener, safer, more affordable, generally better. The ID, it was the fundamental use case. Just like with people, if people have a secure digital ID, it's a birth certificate or a social security number or whatever it is in each country. But what that ID does is it acts as an anchor to other metadata that makes transactions with that person more transparent, safer, more trusted. Same with things, same with vehicles. A secure digital ID for a vehicle can anchor information like location, in space and time, the capabilities of the vehicle, the weight of the vehicle, therefore the damage it might do to a road. And these kinds of attributes create all kinds of interesting use cases and opportunities. For example, right, if you can combine a secure ID with location, with the characteristics of the vehicle, you can pay as you go for mobility. So suddenly you've taken the $27 trillion of the world's transportation infrastructure, which is not tollable, right? Not possible to marginal cost price, and therefore it's a public good today. And you've made it tollable. You've enabled marginal cost pricing, so you can apply now an efficient market to it. What does that do? It creates a totally new source of public finance for infrastructure, right? You can wipe out this problem of infrastructure deficit financing. The fact that it's stranded capital for generations for some of the infrastructure projects. You can enable opportunities for insurance companies and pay-as-you-go insurance, where the real marginal risk is actually what's being underwritten. You can congestion price. You can have green zones in cities where you only allow electric vehicles. You can create subsidies for electric vehicles. You can charge for carbon footprint as you go for vehicles, and so on and so on and so on. There's just an enormous amount of use cases and opportunity because you can connect the interesting metadata with the ID. And the same is true not only for vehicles, but in every industry, in shipping and supply chains, in global trade. It makes the markets more efficient, and the transactions more trusted.
Thank you so much, Chris. And I'm going to do a little bit of promotion here on your behalf. For the members in the audience, if you want to get a little bit more insight into identity standards for vehicles, have a look at DLT.mobi. I really think it's important. And the reason I'm sharing that, Chris, is because one of the challenges that I'm constantly worried about is fragmentation. So for those of you who don't know, my key objective at the DSI is to find a way for us to deal with all the digital islands that we have in international trade and actually enable the sharing of information between all of them. And so I can't help it when I look at the identity landscape, have a little bit of a similar worry within me of all of these different organizations kind of defining their own identities within their supply chains. And what are we going to do once we hit a point of a certain level of scale? So what I was thinking about is to go into a very similar conversation again on fragmentation. And Henrik, I'm not sure if potentially you can help the audience. Just give them a macro level view of the actual identity landscape.
Again, I can try, but as you also say, man, the situation today is that, I mean, everyone have their own identity model, basically. I mean, there's a number of different initiatives. We have GLI, as I talked about, for the financial sector. I mean, WCO have the trade identification number. EU has the EORI number for all the AEOs in the European Union. I mean, there is SWIFT BIC code. GS1 has a code for partners in logistics supply chains. I mean, there's a lot of identities out there. One thing maybe I just should highlight is also that they do not all have a digital signature attached to them, which is, as I mentioned before, is important. But even though all these initiatives is there, it doesn't change the fact that everyone has their own. I mean, if you look at Maersk, MSC, Costco, CMA, I mean, they're requiring you to create an identity with them if you want to start booking digital container shipping. And the software we've seen with TradeLens, for example, they're using IBM IDs. Intra have their own IDs. Same goes for TT Nexus and Cargo Smart's Global Shipping Business Network, and all the other different software parts. I mean, they typically do have their own identity scheme, which is a challenge. And as Nadia has also mentioned, it is a significant hidden trade cost. I also see that a lot of reports has been created. I mean, I talked about the World Economic Forum report, that a white paper that we have, that Nadia and I worked on. But it does also include a call to action for the industry to act now, because, I mean, again, as I said before, it is somehow frustrating. I mean, the technology is ready. The business case is clear for the industry. So next step for me is just the industry should start to go and do it. Also because, I mean, if you see that a side effect to the digitization is that we are reducing trade barriers. And trade barriers gives more trade volume, which is of course for the shipping industry. So again, another reason for the industry to accelerate this one here, because it gives more business for them. I did also write an article on the World Economic Forum's blog on how digitization also will reduce crime, for example, forgery and corruption, as I mentioned before. So both things add to the positive business case for the industry players. So in addition to, I did mention the risk, the cost, and the time, the direct benefits for the industry. You actually get the side effects of increased trade volume and less crime, and this is just important. So even though there's many different initiatives, I mean, we need something to bridge it, but the technology is ready. So I can just repeat, I mean, just do it.
Mm-hmm.
I like the just do it attitude. I think fully aligned on that. So I'm going to pull in Nadia and Chris on this. So Nadia, let's potentially go to you first. So again, from a policymaker's perspective, what's your view? What should they consider when thinking about identity within either their countries or their regions? And how big of a risk is this diverse landscape that we're finding ourselves in?
Yeah, great question. Thank you. What should trade officials consider as they think through this? I would say, first of all, policy makers and trade should look outside, and I see there's already some questions to that in the chat box, but look even beyond trade, look at other industries and sector as inspiration for what they're doing. I think you'll see that this is not isolated to trade, right? This is not just a trade issue. Digital and trust lays at the foundation of any and all industries. And you will see that policymakers in other sectors understand the foundational role that identity and trust plays. In some sectors, policymakers are already further down the path of maturity. If we look at some examples, the world of travel is looking at, right? This digital passwords that has been worked on for travelers, human travelers. Now they're including health officials in that discussion to see how you can actually attach vaccine and other health-related features to such a verified and trusted digital identity. In a way, that's the same for trade, right? You have a trusted digital identity that's mutually trusted and verified between countries. You actually can now start attaching features to that digital identity. So in the whole digitization of trade documents process, all kinds of features can be attached to a digital identity. Do they have an export license? Is an AGOA certificate for duty-free issued against this digital identity for the shipment? There's just, so instead of then handling documentation separately, just imagine a world where you know you're doing business with, you can trust that identity, you can effectively and in an agile way mutually verify the trustworthiness, but now you can also attach all these features that are documentation points in documents. You can attach that and share that very easily with that digital identity. Another example, I saw it came up in the chat, the legal entity identifier, LEI, maybe just for everybody who's not familiar with that. Basically, in the wake of the 2008 financial crisis, regulators worldwide acknowledged the problems stemming from their inability to identify parties to transactions across markets, projects, and regions. As a result, after the financial crisis, the financial sector advocated and then developed this universal legal entity identifier, the LEI. And that's applicable to any legal identity that engages in financial transactions. And there's a lot written about the positive impact of that development. So that's another example outside of trade, but also very relevant and that one can build on within trade. And then, so I have to mention, but I mean, look no further than your LinkedIn account. In the world of job hunting, right, and professional expertise, LinkedIn has become some sort of decentralized way for parties to share and verify trustworthy identity information with built-in reputational systems. Maybe not the greatest example, but so other sectors, industries are working through this as well, and there's a lot we can learn from as trade officials. I would say the second thing for trade officials to consider is that and really understand that as it pertains to developing effective and trustworthy digital identity systems, that, and Henrik said it, technology now allows us to do things that were not possible before. I mean, within the blockchain context, if you just think about bringing in smart contracts, it can allow us to automate and do things with digital identities in trade that just simply wasn't possible before. So technology, coupled with the right policies and collaboration, can be a key enabler then for collaborative parties. And then Oswald, you had a last part to that question. I think you were talking about the risk of the divergent landscape, right? So yeah, so there are some challenges to consider in implementing, global digital identity systems. And I think that's where the emergence of decentralized identity systems in comparison to centralized digital identity systems, the decentralized ones like blockchain, it holds a unique opportunity for trade officials, government, supply chain organizations to create systems that caters for future and forward-looking trade interactions. But that, yes, it requires that governments in collaboration with the industry enables a concept in which government identities, signatures, and verifiable credentials are mutually recognized across regions and ultimately globally. And a critical point, of course, is to ensure that the systems are interoperable and mutually recognized. This is not just a technology question. This is about, do I trust the processes that the other country is going through? We're seeing the same thing play out in the travel world, where it's, the technology is kind of easy to put in place to recognize the COVID vaccine has happened when a traveler enters another country. It comes back to the essential question of trust, right? And processes. Does one country trust the labs and the tests and the processes of another country? So this just expands way beyond this, the technology interoperability piece, but also to putting in place the criteria, the processes, and going back to really trust being sort of the cornerstone of something like this.
Thank you so much, Nadia. It reminds me of one of my mentors in the very beginning of the blockchain journey. Framed to me, he said, the internet gave us connectivity, blockchain gives us trust. And if I think about the identity conversation in blockchain, it really excites me. So Chris, I'm going to head over to you. So I'm imagining quite a few executives sitting there, either looking at their warehouses or their supply chains, etc., and just knowing that there's a lot of value to be had if they actually were able to leverage digital identity in these new modern ways. So what would your advice be to them? How do they navigate this landscape?
So I'll give a don't do and a do here. Do go and join a consortium. Don't go and do another POC in a silo. And I'll go back to maybe something you said about fragmentation and in explaining why I say that. Before any revolutionary technology can have an impact, there need to be standards, there need to be common definition, there need to be agreed ways of doing things. Language is a standard, money is a standard, right? What did God do in Genesis when he wanted to punish man for being too ambitious? He took away their common tongue, right, in the Tower of Babel, right? So they couldn't communicate anymore. There has to be standards. Before Moby, I was an executive at a large auto company. And we did some of the earliest blockchain DLT POCs around rideshare and usage-based insurance and sharing information on Ledger. And what we found was what everybody in the industry found at the same time, which was it was fairly easy to put a charging station or a vehicle or a bit of infrastructure on a chain, but very hard to do anything after that. It turns out the hard problem wasn't the technology, the hard problem wasn't the chain, the hard problem was getting to scale. And the reason in hindsight is very clear, it's this issue of needing to have standards, needing to have everybody doing, operating in a common way, in a common language and understanding. And that's why this fragmentation issue is a huge problem. If everybody develops, if everybody invents their own wheel, you don't end up with a car, you end up with a garage full of wheels. You have to have these common standards, and that what led to the formation of MOBI, and led to the formation of similar organizations. Many of them, TradeLens and MOBI were fairly early, but you see these types of consortiums emerging industry by industry, use case by use case. So the don't bother with your own POCs. You'll waste a lot of money and it won't go anywhere. Go join a consortium, whether it's MOBI or TradeLens or Hyperledger or any of the others. Get together. Blockchain is a team sport, as Brian Bellendorf of Hyperledger Linux likes to say. It is about the community. It's about building a minimum viable community. The standards, the equivalent of HTTP and the web browser need to be in place before your industry can take advantage of this technology.
Thanks a lot, Chris. And I think, Chris, that's a really good segue to the next section before we get to the Q&A, a call to action, if you will. So I think maybe what I'll do is I'll go to all panel members. And Nadia, let's start with you first. For the audience, what would be your call to action to all of them? What can they do in the next calendar or financial year to move us closer towards a space where digital identities are actually used and the value of being extracted?
Yeah. Yes, so it's difficult to start thinking global, right? So sometimes we need to start local with that global piece and aim in mind. So learn from other trade agreements and policies already taking a step to collaborate around interoperable trusted digital identity systems. So the Digital Economy Partnership Agreement, I think it's DIPA, between Singapore, Chile, and New Zealand is one such example of a regional trade agreement that now includes digital identity considerations. Really, this agreement breaks new ground in this respect. The DIPA includes a whole section on digital identities, one of the key objectives of the DIPA being to facilitate end-to-end digital trade based on safe and secure digital identities that are mutually recognized. The DIPA provisions on digital identities focus on interoperability and comparable level of protection. It's a great first step in the right direction to tackle the gaps currently in place as it pertains to digital identity. And I think DIPA can further build on that RTA with more details and practical implementation in the years to come. If you go and look at trade agreements, regional trade agreements, those that sort of applies more immediate with a few countries, very few, if any, really, of these trusted trader schemes today addresses the issue of trustworthy identities. To my knowledge, DIPA introduced, it was in June 2020, I think is the first to. So I would say proposed bridging among several national identification schemes. Many countries and industries, Chris, you talked about one already have digital identification schemes available that helps with trustworthy identity management, both on the organization and public authority side. So this infrastructure should therefore enable reuse of such a trustworthy identity scheme already in place. And if you think about rolling that out in trusted trader schemes. I also think that today we are just starting to see the effects and efforts around decentralized identity taking off. So while working through legislative, regulatory, and technical barriers, one needs to already think about how you can position within the possibilities that decentralized identity is offering. Blockchain-based solutions are going into production. LEY, we talked about that one earlier. I know they've done a proof of concept to experiment with decentralized technologies, but it could help going away from this siloed centralized approaches and help actually with a transition to standardize. And yes, an important piece, sorry, just to say an important piece of that is keeping in mind that you need signatures, e-signatures attached to that. So there are some schemes out there that doesn't have that. If you want to take advantage of attaching features documentation and other things against that digital identity, that e-signature, etc., is really important.
Thank you so much. Henrik, what would be your call to action?
I guess you probably can guess, based on my last comments, it's go do it, right? I mean there is so many benefits from the industry, cost-wise, time-wise, risk-wise, etc. That there's a clearly interest from the industry to drive the initiative. The technology is ready. I mean, whether it's blockchain or not blockchain, it really doesn't matter. And it's probably going to be a mix of a lot of different technologies, but they are ready. It is just a question of the industry making the decision. I mean, the technology is so mature that I always say that if we started today, we probably could have a proof of concept ready within 3 to 6 months, and probably something ready in production already by year end, if needed. It is, yeah, again, taking the decision and go do it. So I mean, we have seen a lot of reports, a lot of conferences. We don't need more of this one here. We can actually get started now.
Thanks, Henrik. And Chris, on your previous point where you said, you know, join a consortia, get involved, produce standards. Any final thoughts before we move over to the Q&A?
I kind of said what I might call to action. I think, look, from a policy perspective, the policymakers can do a lot too. You know, this is uncharted territory. There needs to be, policymakers need to think about antitrust implications of these consortiums. I think TradeLens has just got an exemption from one regulatory body, but these are the kinds of things that regulators should do to encourage these collaborative efforts. It benefits everybody. Making it the digital payments easier, central bank digital currencies, or the encouragement of private stablecoins would be another thing. So these are the kinds of things that policymakers can do.
Thank you so much. So without further ado, let's go to Q&A. There's quite a few really good questions. I've kind of taken 3 out of the audience, and what I'll do is I'll read the question out, and whichever member wants to answer it can go and contribute to it. Before I do that, though, I see Luca has also posted in the chat that the UNCITRAL model law on the use of cross-border recognition of identity management and trust services may be a part of the solution, at least in the legal landscape. And I thought that is a very good one to highlight. So on the Q&A side, I'm going to start with the very first question, which is how can we, and I love this question, I've had this question quite a few times in various different conversations, how can we ensure that the physical material flow with the electronic document and approval process? So if the material sits in a warehouse and the thief scans it and sells it using blockchain, that it doesn't still just sit in the warehouse. How do we bridge these two? Who wants to give it a go?
I think this is almost best, Chris, within sort of the physical entity space.
Love that. Go for it, Chris.
I'll take a crack at it. So number one, we know that properly constructed digital IDs are not easy to hack. We have the example of Bitcoin out there, where we have $1 trillion honeypot, and that system, at least the underlying protocol, has not been able to be hacked. Now, we have to also clearly understand sort of the problem that blockchain solves and what it doesn't solve, right? Blockchain doesn't mean you can trust every bit of information you get. What it means is you can trust the history and provenance of that information and trace it back and see whether it's been changed along the way. What blockchain does is it sets up an ID for a decentralized world, right? Today's decentralized world, right, is a strange mishmash of centralization and decentralization. The internet, Michael Casey calls it the original sin of the internet, is the bolting on of centralized ID authorities onto a decentralized system. And that's enabled fraud, it's created honeypots, it's created a larger surface and incentives for attack. And it's become a huge problem, right? The most reproduced cartoon in the New Yorker magazine's history is that one of the dogs sitting in front of the computer. I think just about everybody's seen it, turning to the other dog next to him and saying, the great thing about the internet is nobody knows you're a dog, right? ID provenance is a huge problem in a decentralized world. And so you have to have secure digital IDs. That doesn't mean that the original data that was put onto the chain is correct, but at least you can trace it back. Nobody has privileged access to the root. And that reduces the not only the opportunities and incentives for fraud, but just more common error and accidental misrepresentation.
Thanks a lot, Chris. I think the next question, I think I'll go to Nadia on this one. This is all very well and good, but how do we ensure that companies in developing countries can also have affordable access to this?
Yes, now that's an extremely important question. And so I come very much from the technology side. So for me, I'm seeing all these opportunities and possibilities with technology. But we, of course, need to acknowledge that there are economic, political, and other barriers, including the global political landscape that's not perfect. There will be certain obstacles that technology and data policy cannot address. And also, the economic interests, right, by various parties that will not always have the goal of that ecosystem equitability in mind. I want to go back to technology. I mean, if you think about decentralized digital identity systems, not to disregard some of the challenges and barriers, but you actually are seeing some of the most innovative technologies happening in some of these more emerging markets where they really have an opportunity to leapfrog. I mean, they always use the example of Africa with the mobile and payment system. So for me, I think we really need to lean in and take advantage of what technology, the features that technology has to offer. So smart contracts, ability to be legally binding instruments. You have some unique privacy preserving techniques that are enabled by blockchain that allows us to build more trustworthy systems that are more immune to changing human factors. Data can be encrypted, so it's only visible by authorized parties. So automatically encrypting, anonymizing data, transmitting data along with digital right management rules, so the data can't be used for purposes outside of these digital identity systems. I think these technology enablers, together with policy, are incredibly important to lean into leverage in a world where there are economic interests that's not always aligned, or where the political landscape might be barriers.
Thanks, Nadia. That really helped a lot. I'm going to take the last question, and it almost feels like we're going to end off where we started with Henrik. So Henrik, one of the questions that we got is, are we not at a point where internationally accepted standards can be developed? And I'm thinking a little bit about the slides that you had in the beginning, and especially the last few slides. So what would be your take on that question?
And once again, what are you talking about? Sorry, Oswald.
So the question is, are we not yet at a point where internationally accepted standards can be developed for identity?
But we are, and as I said, I don't think we need a lot more standardization. I do also envision that the way that this will work is that you don't necessarily have just one global identity. I talked about the friend of a friend concept. So for example, as I said, in Denmark, we have our identities for businesses and governments. And that's going to be the same in other countries as well. But we need a kind of layer that connects those ones together. And you can also then use your G-Live, you can use your GS1 code, you can use all the different kind of codes there, which is the important part. And this is also what EU has also done with the EIDAS part, right? It is connecting the different identity schemes. And I think this is where we're gonna head. Because again, if you want to have have one identity, one party issuing the identity. I mean, where should that party be placed, right? Should it be in Europe? Should it be in US? Should it be in China? Should it be in Africa? Should it be? That will give a lot of political challenges. So I merely see that we need to have something that bridges the different identities. And then it's again a question of, again, the friend of a friend concept. I mean, if the one that you trust has actually verified that this issue, that this country has a good way to issue identities, great, then I trust this one here. And again, I did also talk about the different national jurisdiction. Maybe you trust a neighboring country, but maybe the other side, on the other continent, you don't necessarily trust that country that much. And then it's your decision. What do you want to do about that? Do you then want to take it out for manual control of that the paper is correct and do all the good old manual processes, or the bad old manual processes, probably more correct, right? But this is up to you, right? It's up to each jurisdiction to decide how much trust do we want to put in that one. And because if you wait until the world has agreed, it's going to take a lot of time. And it is, as I said, it is a bit frustrating because we don't need to wait for that one. We actually have technologies that can mitigate that. You both have that you control your identity, that the national jurisdiction makes their own decisions, that you can make your own decision about how much trust do we want to put in that one there, instead of trying to wait until the world has agreed. And that's going to take a long time. So we can actually do something now that works and that significantly will reduce the cost and time and risk in global trade.
Thank you so much for that. So I just want to thank all of the panelists for joining us today. Absolutely appreciate it. Thank you, Nadia, Chris, and Hendrik. I really think this helped quite a few people to get a sense of what identities are, the value associated with them, a little bit of insight into the fragmentation question. And I love the call to action. It's about not being afraid. It's about going ahead, you know, getting involved, using, Nadia, to your point, either the trade agreements that already exist, Chris, to your point, some of the standards already in the landscape. And then Hendrik, to your point, is like, let's not sit on our, let's move and let's actually use this. It's not just technology. We have blockchain. It works. We can move forward. And I want to end off on a note, again, from a legal perspective, when we think about identities, you know, the UNCITRAL model law on the use of cross-border recognition on identity management and trust is another area that people can start kind of moving into. Feel like all the puzzle pieces are there. Let's just assemble and conquer. So thank you. I'm going to hand over back to Emmanuel. Thank you, Emmanuel.
Thanks Oswald, and thank you all for this engaging and insightful discussion on the question of digital identities. So we'll now have a short break. We're actually going to reconvene in half an hour. We finished this session a little bit early, so that will give us time to bring the next speakers on board, and we'll have a discussion on what policy actions are being taken or should be taken to make digitalization a reality. So what's being made on to try and bridge the digital islands, and on the regulatory front as well. So don't leave us. We'll start again in about half an hour at quarter to 5 CET European time. Thank you. Okay, great. So we can start now. We have all our panelists. So welcome back and welcome to this final session of the 2021 edition of the Global Trade and Blockchain Forum, which will discuss policy actions that are being taken or that should be taken to advance trade digitalization. So today we heard about the importance of digitalizing international trade, in particular in a world shaken by a pandemic that is forcing many people to work from home and has had a major impact on supply chains. The COVID-19 pandemic has clearly accelerated the move towards digitalization, but we're not there yet. We heard how this technology, blockchain or distributed ledger technology, can facilitate access to finance, in particular for MSMEs during session 2. We heard the importance of digital identities for international trade. That was the session right before this one, moderated by Oswald, who is also with us on this panel. But we also heard the challenges that practitioners in the field face to scale up their solutions. So what do we need to do to make it happen and avoid having the same conversation in 5 years' time? Now, the idea of this session is to present some of the initiatives taken to address challenges to further digitalization discussed today, such as the famous digital island problem or the lack of regulatory framework, and to explore what more may be required to make end-to-end trade digitalization a reality and to catalyze action. So we want to make this session as interactive as possible. It's the last session of the day. It was a long day. So please ask your questions via the chat function at the bottom of the screen. I will take them as they come. May keep some for the end, I will see. So we have with us today an outstanding set of panelists. We have first Luca Castellani, who is the secretary of the UNCTRAL Working Group 4 on electronic commerce, and he's the king of UNCTRAL model on electronic transferable records. That's how I like to call you, Luca. So if you don't know what the MLETR, that's how we call the model on electronic transferable record is, no worry, he will tell you all about it in a few minutes. But Luca is not only a UNCTRAL high flyer, he also loves flying for real. His hobby is civil aviation. He loves flying odd planes and trips, whatever you would worry the average passenger. But he feels he's better as a navigator, old school, map and compass. So Luca, you now have the big task of helping us navigate the regulatory intricacies of electronic transferable records. No pressure at all. Next, we have Sarah Green, who is Law Commissioner for Commercial and Common Law at the UK Law Commission. And Sarah is the UK Queen of Electronic Transferable Records. She will tell us all about the challenges that they faced in the UK when trying to transpose the UNCTRAL MLETR and how they've gone about it. But Sarah is a lawyer, but her real dream was to train guide dogs for a living, but law got in the way. Next, we have Oswald Kauler, who is Managing Director of the ICC Digital Standards Initiative. You already know him, he was moderating the previous session. Now, Oswald has the arduous task of trying to find a way to connect current digital islands. I know that Luca, the navigator, is helping you on the regulatory front, and I'm happy also to have joined this exciting endeavor. Now, Oswald's favorite book is Hit Refresh, The Quest to Rediscover Microsoft's Soul and Imagine a Better Future for Everyone by Satya Nadella. Now, I must admit, I haven't read the book, but I now will. Now, the title is no doubt inspiring and in line with what we want to achieve here, to imagine a better trade future for everyone. So thanks a lot for the tip, Oswald. Next, we have Parm Sangha, who is Global Blockchain Leader, Trade and Trade Finance at IBM. Parm had the privilege of meeting Sean Connery, the first film James Bond, at the World Cup opening game in Paris in '98. He also met the second radio James Bond, Bob Holness, when he, Parm, was on a children's TV quiz program hosted by James Bond 2. Now, this being said, Parm's goal is not to be the new James Bond, but to be the secret agent for trade facilitation through digitalization. So what a program, that's really a big program. And finally, we have Marco Vontamietis, who has spent 25 years at Standard Chartered and who is co-chair of the ICC Working Group on the Digitalization of Trade. Now, with 4 young active boys and being heavily involved in digitalizing trade and trade finance, there's not much time for sleep in the Vontamietis household these days. So when Michael is not active on his various night jobs, he sleeps deep to recharge. And some of his records include sleeping through a coup attempt in Nairobi with missiles and jets flying overhead, and through a gas explosion in next door flat in Hong Kong that blew his door in. Wow. Now, without further ado, let's start our panel discussion. And let me start with you, Michael, the tireless advocate of trade and trade finance digitalization. So as I said, you are the co-chair of the ICC working group on the digitalization of trade. And so as co-chair, what do you see as key impediments to the digitalization of trade and trade finance? And in your view, what more needs to be done to make it happen, to make trade digitalization and digitalization of trade finance happen?
Thanks, Emmanuel. I think you summarized what happened today really, really well. And we heard about digital islands and how various technologies, including blockchain, artificial intelligence, amongst others, can help digitize and this sort of trade ecosystem and drive economic growth. We all know that a typical trade transaction goes through 30+ stakeholders with hundreds of different interactions and communications between them and the buyer and the seller. And this really leads to the inefficiencies and makes it difficult to move away from paper and digital trade or in trade. And so when you think about this from an MSME standpoint or from perspective, this slide that I put up here really tries to illustrate what it feels like to be that MSME. Whether you're a big or a small company, you need to deal with all these participants in the trade ecosystem. Each participant is trying to push their process, their technology onto the next player in the chain. And so unless you're really a large company, a large multinational, most of the time, everything just ends up as a PDF document or as a paper or email, which is maybe the paper is couriered to each other. And it leads to these billions of pieces of paper that are in circulation at any point in time that's required to enable international trade. So if you're an MSME, you're going to be asked to sort of sign up to 20 different procure-to-pay networks because each of your buyers is on a different network. And because they're bigger, or the sellers on a different network. And there's a bunch of different logistics companies, shipping companies, customs that you have to deal with, customs agencies, ports, inspection agencies, and so on. And it's no wonder that it's difficult for MSMEs to become digital first, even if they want to. And without being digital first, the transparent information required to enable MSMEs to be more financeable is a long way away. So how do you solve this digital jigsaw puzzle, as I like to call it, to connect these digital islands? So the ICC, so the next slide, thank you. So the ICC launched a roadmap for digital trade in 2018. And really what it highlights that in order to digitize, it's not just about legal frameworks, it's about liability, it's about data governance, and it's about information security. And it's great to be on a panel with the foremost experts in the field here today. But the roadmap here really shows what is really needed from governments, industry bodies, as well as industry itself in order to get onto this journey. And for example, in the document, we outline 9 steps governments could take to unlock digital trade. Now, John Denton mentioned updating legal infrastructure through the adoption of unit trial, and I'm sure Luca is going to be giving us a real insight into that today. But adopting it into local legislation is going to be really, really key. But it also includes things like the customs single window, which was also raised in a previous session. So it's important to realize that this journey is just a roadmap. It's going to take time. But it's imperative that all the participants support MSMEs as the world works through the current pandemic. MSMEs are under increasing pressure at the moment. So this pandemic induced prices has not helped at all.
No, thanks a lot, Michael. And your first slide was very powerful. I mean, it really shows the complexity that MSMEs are facing when trying to trade internationally, and the importance indeed of digitalization and trying to simplify that landscape. So let me now turn to you, Palm. IBM recently published a study that looks at these issues. So could you share with us the key findings of your study?
Yes, thank you, Emmanuel. And together with what Michael was highlighting, it's complex. But what we heard very early this morning, and it seems like a long time ago, but we did hear DDG Yi from the WTO saying that going digital is a matter of survival. We heard Secretary General Denton of the ICC saying, well, global trade seems to be immune to digitization, and he highlighted real levers that industry participants or trade actors could pull upon. And we also heard great examples from the IMDA as to real practical steps that you can take to actually start implementing that workflow within which resides the data, and then look at how to test and experiment, but with an open governance in mind, open source in mind, and then looking at standards by which to drive adoption. With all of that said, what we were looking at IBM when we were taking this study into account was those references that the leadership made this morning, but then take another view, and that is of the industry participants that Michael highlighted in his complex chart. And we heard three things as a basis for this study, which we'll run through in the three chapters. First was industry actors and trade actors were saying, number one, digitization is going to happen, period. There's no question, there's no debate there. But what they are also saying, well, it's a very complex, interconnected, paper-based ecosystem. How are we going to get everybody on board at the same time in a digital way? So that's one question that we were hearing loud. Second one was on digital investments. There are funds, there is budget, but what's happening with that digital investment to digitize trade? And what we were hearing was that people are delaying some of these decisions or going in a very slow step forward because they don't know if they're making the right investment on technology and will it interact with whatever else that might be out there in the ecosystem. So they're very much worried as to whether they were going to get that return investment once they had received budget. And the third, guidance. We were hearing that industry ecosystem members were saying, we need more collaboration, and maybe that collaboration needs coordination. And maybe industry bodies and governments and regulators could be that facilitator of coordinating the discussion to digitize, because adoption is more than just publishing frameworks and guidelines. So with that sort of context of what we were hearing, we commissioned this study. And it really was to then look at the trade actors in global trade and trade finance and say, where are you today with blockchain in digitizing your trade workflows? Where do you want to go and why? And then the most insightful piece in chapter 3 is, how do you think you want to get there? And so if I can go through these three chapters very quickly. So the first thing that we heard in chapter 1 was that the mental outlook. We are now seeing a shift where people were building for themselves to get their own market share and their own profitability. People are now beginning to realize, actually, I need to be a little bit more collaborative. And we heard the word collaborative come up several times from the earlier workshops as well and panel sessions. 69% want to build with interconnectivity up and downstream in mind. We're seeing clear patterns with blockchain in as far as build collaboratively because of team sport, but then also where are we seeing the immediate value? And the immediate value with blockchain is really on cost takeout. The operational efficiency gains you get are significant, and they're all in that reconciliation settlement parts of the transaction workflow, where parties then don't have to have that reconciliation across different databases because it's now all distributed. And first waves, organizations are seeing that they're seeing ROIs. Maybe many aren't declaring the ROI because they are still looking at this from a competitive advantage point of view, but we are seeing good returns on investment. So first chapter, there's a change in attitude and there's an investment that's showing returns. That's good foundation. Second, so where do industry want to go? Well, they know that they have to share data in a much smarter way when they go out of their enterprise. So when they go into the virtual world from their immediate four walls of their bank or their logistics or their shipping company, more than 75% said we want to share data. But less than 50% said we trust the movement of that data and to make sure that it's being respected. Not only being respected from a privacy point of view, but equally important, also from a monetization point of view. So for example, if I'm trading with Michael and Oswald and Sarah and Luca, and we shared information, and we all benefit from that sharing of information, how do I know that maybe Luca's not making more money than me? So making sure things are equitable in that sharing of data, but 88% loud and clear said, listen, whatever we do on data, it needs to get greater governance and direction in as far as standards. But there's good standards out there. Maybe we just need to top up. We don't have to create something new. Because if you can share the data, which is the second part in the second chapter, we were finding that then that data in the supply chain to show the provenance of a product, for example, that the cobalt was responsibly mined for the electric vehicle that I'm buying to get brand preference for the automotive manufacturer, loud and clear, they show preference and they show more loyalty and stickiness for the ultimate consumer. And if you can then digitize the workflow to share the data, the next interesting wave that we were seeing loud and clear from 1,000 companies in 22 industries and 36 countries was if you can digitize the workflow, you can then maybe digitize the asset. And that takes you into another world of opportunity, because the last reason why companies wanted to share data is because then they saw growth. 90% saw a 1 to 10% GDP growth if they shared data in a smarter way. And it was more than just shareholders, it was stakeholders, it was the environment, it was the circular economy, it was the sharing economy when we're looking at the environment as well. So they could see that there was value in sharing that data. Third chapter, final, was then how did organizations want to collaborate beyond their borders and as they go into this virtual world of interconnect? Well, they all recognize from a technology point of view, no one technology is going to rule the world. There's going to be a mix. But guess what? Of that 85% who saw that there's going to be a mix, it's all got to work together. And there's got to be this interconnectedness, and we'll touch upon the interoperability later on, and also that movement of that data. Whether you're on Azure, whether you're on Amazon, or whether you're on IBM, whatever the cloud, it's got to move from the infrastructure as well. So it's got to be interconnected. And also, do we have to always choose one of 5 or 10 KYC providers or digital identity providers, which has come up? Can we choose one, or maybe choose a collection that all interoperate because one's good enough because the other one said it's fine? Companies want to be a little bit more efficient. So again, it manages their investment from an internal point of view, but then where and how? And that's where it's getting quite interesting. Yes, blockchain is distributed, but we all know that it's private permission, public permissionless, and it's distributed. But maybe you need a grown-up in the room anyway, just to provide some supervision. And so this notion of a neutral venue is something that we were hearing from organizations say, in the trade ecosystem, maybe we should be connecting to something as opposed to just building our own and then trying to glue it together.
Thanks a lot, Palmer. And I like your expression, we need a grown-up in the room. Now you gave me the perfect transition to the next question that I had for you, because you talked about the importance of interconnectedness. Now we heard the word standardization, interoperability, interconnectedness quite a lot today. Standardization and interoperability are two words that come back virtually in all discussions we have on technology. And we heard them this morning, we heard them again earlier this afternoon. But these are multidimensional terms. So let's dive a bit deeper into these different dimensions and discuss how they can be tackled. So let me first take technical interoperability and trade interoperability, and continue with you, Palm, actually, because IBM is at the forefront of enterprise blockchain, and you've been actively developing several DLT projects related to international trade. So why is interoperability an issue for you?
Interoperability is critical to adoption, but interoperability, people normally jump to the technology side first, Emmanuel, and which is fine. But as we've heard loud and clear today, is that there's also the interoperability from a governance point of view, i.e. from a legislation, and I'm sure Sarah's going to talk to that, but then also from a business point of view as well, as far as the business outcomes and where's the natural incentive. So there's two other elements to factor in, and those need to be considered in together with technology. But specific to technology, if we don't get the right alignment, then it does have a material impact on adoption and rollout. And again, I'll touch upon a little bit of those things later. But when we're looking at technology interoperability, there's 3 areas that people look at it today. And then there's a 4th, which actually is where we're seeing a pattern. The first is, as we said, it's all about the digitization of the workflow at the movement of data. Today, APIs at the top level work well. There's a load of companies out there that provide capabilities. They're not open per se, but they are competitive, and there are methods by which you can move data in that digitization of the workflow. And as I mentioned before, then once you're moving the data through APIs from applications, you're going to hit the infrastructure, and that's where the cloud infrastructure comes in. And that is very open because of Red Hat Linux, and you can sit on top of an AWS or an Amazon or a Google or whatever cloud you want. So that's fine. The piece where people then are getting het up is on the blockchain interoperability. First thing, not every blockchain is a DLT. And as we heard earlier on, there's different consensus models by which these platforms work. Main thing, they've got to work together. And sometimes I do believe that conversations go down to the weeds of technology interoperability at a DLT or a blockchain level because one wants to win that battle, but nobody will. It's going to have to coexist. It's a team sport, no matter whether it's private permissioned, as I said before. So they're the three things that we see in interoperability from a technology point of view. But the fourth layer that we're now seeing is actually interconnect. Because the net, and I think Vinay said it earlier on, technology can do this stuff. It's the business and the governance that will drive the direction of how it's then designed. But on the design side, we're seeing interconnectedness. And the interconnectedness is all about how do I move data from one trusted party to another trusted party in a trusted way. And that's where we're seeing a lot of the focus with regards to interop.
Well, thanks, Paul. And as you said, there's more than just technical interoperability, and we'll touch upon the other aspect of regulatory interoperability and business interoperability. And talking about business interoperability, let me turn to Oswald now. Now, the ICC recently launched the Digital Standards Initiative, which aims to address the famous digital island problem. So my key question to you, Oswald, is how do you intend to build bridges between existing digital islands, and what challenges are you facing? I bet you're facing a lot of different challenges. So very keen to hear that.
Thank you so much, Emmanuel, and thank you so much for having me. Short answer, standards. There we go, done. On to the next speaker. No, I'm joking. So when I think about trade digitization, I think about the Northern Star, which is how do we enable, whether it's importers, exporters, carriers, banks, and customs officials to effectively and efficiently digitize trade. And when I think about the effectiveness of trade digitization, it's exactly what Palm also mentioned. How for every dollar that we are spending on these investments, how do we ensure that the percentile of digitization happening in our supply or trade processes are going up? And the second thing is, how do we ensure that we're doing that efficiently? So from a cost perspective, to Michael's earlier point, we're not sitting in a position where maybe some of the larger organizations can join 10 or 100 different blockchain solutions or non-blockchain solutions because they have 10,000 suppliers to move their trade documents around, but MSMEs and smaller participants have to deal with that level of complexity. And I think the most important way to do this is to actually not necessarily look at it again from a technology angle, but actually look at it from a carrier, importer, exporter, and bank's perspective. So if I'm a carrier, for example, how do I digitize the preparation and issuance of bills of lading documentation so that it can be used in whichever platform the industry is using? How do I do that in a way so that if I'm at a bank, I don't necessarily have to go and train up every single branch member on 10 different applications just to move title documentation across. So I think this is important. It's important to think about this from a customer perspective, because then things become a little bit easier, becomes a little bit simpler to figure out, well, where should we invest our time and effort? And to Palm's point, I think what we'll find is a lot of the puzzle pieces are already there. So you'll see I have only one slide for today. And on this slide, you'll get a sense of what are the 5 key focus points that we have on DSI. And the very first one is how people find standards. What we found this wealth of great standards out there, but when we were talking to the developer community, they weren't necessarily leveraged because it's very difficult to find them. Even myself, 7 months into this journey, I know of certain standards being produced and I can't even find them in Google. So how do we make that easier for developers so that they can spend more of their creativity and their time producing great solutions and less time trying to figure out what a legal entity, for example, should look like, or how should I prepare and issue a bill of lading for containers. The second one there, and this is where our partnership and our relationship with Luca is so important, is the outdated regulation. A lot of the challenges we actually have when it comes to interoperability between two systems is how do we prepare and issue a document of title in one system and actually use that document in a completely different system, for example, for discharge. And this is where we need the legal landscape to start seeing these documents as functionally equivalent, the digital counterparts to the physical. Now you'll see I also have private law barriers there. And the reason we have that as a focus point is because there's a lot of rule books and a lot of different terms and conditions out there. And even if we do all the work to standardize how we prepare and issue bills of lading, the reality is that unless a customer or a supplier signs up to all the different rule books out there, they won't be able to use that bill of lading from one system and another. So we have these two focus points, very, very legal in nature, and we spend a lot of time with lawyers, which is fantastic. The last two is really the standards themselves, and this is where the efficiency comes in. How do we share what good looks like? How do we ensure that when we find, for example, a great bill of lading standard for dry bulk, that we liberate that so that anyone, whether you're a fintech, whether you're a carrier, whoever, can actually use that to enable solutions based on what your needs are. So these are the 5 key areas that we're focusing on in the DSI. You'll see it's not just one challenge that we're focusing on solving. And I think the area that keeps me up at night a little bit is more in the legal space. To Palm's earlier point, from a standards perspective, there's a lot of great standards out there. I'm not too worried about the technology standards. There are ways to deal with that. But when it comes to outdated regulation and private law contracts, this is really, I think, where the keys to the kingdom will be when it comes to enabling efficiency and effectiveness in trade digitalization.
Now, thanks, Oswald, for this very useful overview of the work that you do at the DSI. And well, you mentioned outdated regulations, the private law contracts, that you call the famous rule books. So this is actually the perfect transition to the next part, which is about regulatory interoperability, which is, as you said, a major concern. So let me now turn to Luca. So Luca, UNCITRAL adopted the UNCITRAL MLETR, so Model on Electronic Transferable Records, in 2017. And it was termed on a LinkedIn post that I read some time ago, a hidden treasure. So let's make sure that this treasure is not hidden anymore. And it would be great if you could explain why the MLETR is so important, and maybe start with what electronic transferable records are and why they are important for international trade. Over to you, Luca.
Thank you very much, Emmanuel. And first of all, thank you for having me here. I would like to thank you, but also to thank all of the panelists and the participants. It's been a long day, as you said. We still have a very good attendance. Now comes the hard time, because the lawyer is stepping in, and I'm aware of Oswald made a great presentation. Now I am torn in between, when, with all due respect for the following speaker, who is also a lawyer. We have to bear in mind, on the one hand, the attitude of those who say, whenever I want to kill a project, I send it for a legal opinion. And on the other hand, the easy solution that we find already in Shakespeare, first thing, let's kill all the lawyers. That's the most famous line that we can have, and the most famous suggestion to deal with us. If you don't want to follow Shakespeare's suggestion, we can look at uniform law as a possible solution to what we are discussing now. I work for UNCITRAL, which is the United Nations Commission on International Law. It is the core body in the UN system for the harmonization and the modernization of commercial law. UNCITRAL has prepared a lot of texts on electronic transactions and electronic signatures. I was actually very interested also by the previous panel. And the working group 4 is currently working on a model law on identity management and trust services, including cross-border use. But just before the current project, there was this project on electronic transfer records. That is to say, how to enable, please allow me not to say regulate, because this is the opposite of regulation, but how to remove obstacles to the use in electronic form of a number of commercial documents that entitle the holder to receiving money or goods. So these are very important documents because according to commercial practice, these can be checks, bills of lading, promissory notes, warehouse receipts, bills of exchange, so on and so forth. But what is important is that a piece of paper has the magic to entitle to get money or to get goods. Therefore, it is very valuable. Now, everything that was said so far, but in particular what Parm said, comes together with this because this has been for many years the missing element in enabling the notion of data pipeline across all commercial transactions, in particular trade financing, in particular logistics, but also, for instance, paperless trade facilitation, single windows for customs operations. This model law on electronic transfer records, MLETR, or if you wish to be affectionate, Melita is actually her name, for those who like her. It also specifically enables blockchain because it is technology neutral, but it provides some guidance on how it can be implemented with the use of blockchain. It opens up to dynamic information coming from the Internet of Things, from oracles. It allows for incorporation of what people call smart contracts. Maybe we should call them persistent scripts. But anyway, we know what we are talking about. So why is it so good? First of all, I want to address any possible concern. Here, there is no regulation. There's nothing new that has to be complied with. As I said before, it is technology neutral, but it's not technology neutral just to make it future proof. It's also technology neutral because the final goal is to promote interoperability. So we believe in technology neutrality as and mutual legal recognition as the two gateways to achieve interoperability and to enable data flows. That's what we want to have. We want to share data, reuse data, analyze data, increase efficiency, increase control. One very good thing in this model is in line with previous ancestral texts, and these texts on e-transactions and e-signatures have been adopted in about 100 states. So chances are 1 out of 2 where it's already in force in your country. It's based on functional equivalence, which means that what we call substantive law, that is to say the law that defines the rights and obligations of the parties. The same applies whether the document is on paper or is electronic. Very convenient, especially in case we want to switch. Usually we switch from electronic to paper, but we don't change the substantive law. We don't change the rights and obligations of the parties. Because of the functional equivalence approach, everything that may be done on paper may be done electronically. This includes dealing with third parties who are not related by contract with the parties to the document, the parties named in the document. This means also using it as a collateral and with the same capitalization requirements that are requested for paper documents. But then, of course, as I said before, we can include metadata, we can include dynamic information from oracles, smart contracts, and everything we want to include and we should include nowadays. And to me, trade is already now first and foremost about monitoring transactions based on information originating by objects, be them physical or digital. That's why I was so happy to listen to the panel before and see the huge importance of objects in this discussion. As I said before, we have to focus on the end goal. And the end goal here is to enable fully digital logistics and trade financing. So I believe we could have a vision here. We can share a vision. That is to say, currently, when we have a commercial transaction, we have one economic transaction, let's say a contract for sale of goods. That's one. But of course, we have multiple documents, commercial documents or compliance documents, all of them on paper, can be up to 100. Having more or less the same information. Ideally, they should have the same information. Sometimes it's not even possible. Sometimes it's not meant to. It opens the door to all kinds of things. If we change a little bit, we all say when we digitize, it's an opportunity for business re-engineering. But what does that mean here? Here it's more of a, I call it a quiet revolution. The quiet revolution is we move away from all of these documents, digitizing one-to-one, and we put all the information of the transaction on a single electronic record, which is also transferable. And what we achieve there is that if we have a single data source, all the information has the best quality. It's up to date, it's complete, it's accurate, and it's authentic. And then we can generate all the documents we want from that single source. And we can update it, of course, at the same time from that single source. You see here, better governance, less compliance costs, reduce errors and inconsistencies. Let's think what just happened with the Suez Canal. I am asking to the audience, how many documents do you have to update because of a delay in the expected arrival date? And this could have been done once at the source. And maybe you have to do it again because you don't know when you actually will be able to unload the cargo. And let me finish, because it's important these days, with an example of what this could mean for COVID-19 economic recovery. Now, we want paperless trade because we want to reduce personal interaction and associated risks for humans and for, of course, the goods. We all know blockchain, for instance, helps us immensely with traceability. How important it is these days to know these medications, where are they coming from? Who is providing, the guarantee that they are what they are supposed to be? And let's not just think from the first world perspective. That's really important. But obviously, when we have all of these information available, then, as I said before, it's possible to have very good governance and to have control and to prioritize those shipments that need to be prioritized and send them to the fast track, to the green channel, whatever we have, because we want the humanitarian relief right here, right now. And then, of course, in the medium term, we have what Oswald is advocating, because all of these, more control, less fraud, less documentary fraud, less risk, based also on the use of identity management and trust services and the identifiers, then it means we know the parties better. We have more information. And those parties that are worth, they can get benefits, including access to cheaper credit. Now, this is a model law. It can be adjusted to the legal needs of each jurisdiction. I'm so very happy that Sarah now will say how we're doing it in England. But I want to say, as no matter how small the economy or the country, each country has a fair shot at peace. And sometimes those who apparently have less, they might find themselves jumping right at the front of the line, because it's so easy to catch up these days in this space. Thanks, Emmanuel.
Thank you very much, Luca, for this introduction to the MLETR. So let me now turn to Sarah. You're working on a proposal to transpose the MLETR in UK law. And what I understand is that it's not necessarily easy to simply change the law and allow for electronic transferable records. So what makes this change potentially difficult, and how are you approaching this issue? I think that would be very useful for people in the audience to learn about your experience in transposing the MLATR. Over to you, Sarah.
Yeah, so it's an interesting exercise, and it seems, I can imagine from outside, to be a frustrating process that we're going through, because I can imagine that the question arises in lots of people's minds: why can't you just write a law that says we can use electronic documentation in the same way as we can use paper documentation and everything should be fine? And it would be nice if that were the case, but as I guess most people here realise, and certainly Luca realises, that it's not as straightforward as that. And Melita is what I now call it. Luca has taught me a proper name. So what Melita does, obviously, is provide a fantastic framework from which different jurisdictions can take principles, can take guidance, and implement those in a way which fits with the peculiarities of their own legal system. And the other thing that I found really helpful during this project, so I should say that the Law Commission is in the process of, we're about to publish in the next month a consultation paper on our proposals. And in the process of doing that, I sat as an observer on the panels of several bodies across the world, because of course all jurisdictions are struggling with more or less the same issues. And we thought it was very important not to formulate any proposals in any blinkered way, because as everybody has said so far today, and of course it's obvious, that there's no point in doing this as a unilateral measure. I mean, it just wouldn't work. We've all talked about interoperability of systems and interoperability of legal systems particularly, and of course that is central. But again, it's not as easy as just saying everybody should do the same thing, because that won't work in every single jurisdiction. So I found it very helpful to sit as an observer on panels doing this for different jurisdictions, so that we develop, as the Law Commission of England and Wales, so that we develop our proposals with an eye to what everybody else is doing. And it's no surprise that you have lawyers across the world who are really interested in this stuff, really knowledgeable about this stuff. And there is so, I mean, I'm happy to report that there is so much common ground, and that actually, although we can't have a plug and play solution, we don't even really need one. There is so much that we can work with and just sort of put it into the jigsaw of individual jurisdictions. So I feel very positive about it. We've also made it very clear in our proposals, as people will see in the next few weeks, we have a specific provision for change of medium, so that if a document that is governed by English law, which if our proposals go through, will be perfectly accepting of electronic documentation, they will be a perfect, those documents will be a perfect legal analogue for paper documentation. But there is also that provision which allows for change of medium. So if that document comes from a jurisdiction that doesn't yet recognise electronic, or goes to, there is a recognition that the change of medium will not affect, for the purposes of English law, the legal effect. So that's been, I think, an important development. I mean, in terms of the peculiarities of English law, what has been the main concept so far that has been a blocker? Because that's what we're really talking about today. It's the legal blockers that exist now as historical accident, really. Because of course it's only relatively recently, certainly relatively recently in terms of English law history, that we've even been concerned with obviously digitized assets and digitized documents. So the question's never really arisen before, but the problem in English law is that of possession. And essentially, to cut a long story short, the problem with the legal acceptability at the moment of digitized documents in English law is that they can't be possessed. And if they can't be possessed, and that is a term of art, if they can't be possessed, then they can't be used in the same way as paper documents. So essentially what our project aims to do is to decouple possessibility from tangibility, because these documents are seen as intangible. whether or not you agree with that classification, that is how it is. And as I said, the question's never arisen before, because historically, if you wanted a bag of gold or a horse or a cow, well, you could possess them and they were tangible. So the question never arose. But now, of course, it does arise, because there are all sorts of things now that are digitized that actually, I think, as a matter of law and as a matter of fact, you can possess in a way that looks analogous to possessing something that's conventional. So the basis of our project is, obviously we have exactly the same objectives as Melita, and we do very, very similar things. So Melita, as Luca has already said, provides this functional equivalence in terms of control of an asset. So once you have a sufficient amount of control of a document, then that has a certain legal effect. And that's basically what the same shape really as what we're suggesting, but for English law, we are expanding in effect the notion of possession to make it clear that if and when a digitized document exhibits certain characteristics, now that's really important, because what we're not doing is throwing open the doors and saying everything that's intangible can be possessed, because that would have huge consequences, and most of those we don't want. So what we have done is we have isolated certain characteristics of possessibility, which don't require tangibility. And if and when a document exhibits those characteristics, it can be possessed for the purposes of English law. And that, I think Luca will agree, I'm sure he will tell me if he disagrees, that is a compatible means of achieving the same ends as Melita. It's very common, as I said, across other jurisdictions. So these are proposals. The most we can do at the Law Commission is make proposals. But if they are adopted, then electronic documentation will be treated in exactly the same way if it exhibits those characteristics as paper documentation. And that will then throw open really the whole issue back to the industry and back to technologists, and it will be up to them and up to the market really to formulate, and I think most of them are nearly there, certainly the people that I have spoken to and the organisations I have spoken to. It will then be up to those commercial parties or indeed any parties to formulate documents which, for the purposes of English law, meet those characteristics. So in line with everybody else, we are technology neutral. The proposals are technology neutral. We've tried to make them as future-proof as possible because, of course, we don't know what the next development is going to be. And that's what we aim to do, is provide this legal certainty. So that's what Oswald mentioned. That is, of course, key. Parties want to know if they're going to develop this technology, that it's going to have the legal recognition that they desire. That's what we want to do. So we want to say, if you tick these boxes, you will get legal recognition of your document. So that's where we want to end up, and I hope that's what our proposals will do.
Well, thanks a lot for having walked us through the challenges that you're facing and the way you've addressed them, and the fact that you've decided to expand the notion of possession. I have a follow-up question for you, and actually there's a question in the chat that is very similar. Would you have any advice to give to governments looking into adopting the Militar? I used to say MLETR, so now I have to get used to a new terminology, Luca. So what are the resources available for them to build their knowledge and capacity? And the question in the chat was actually addressed to Luca, so I think the two of you could respond. Luca, what is the biggest hurdle in achieving the stated dream, especially from the lesser developed world perspective? So over to you, maybe Sarah first and then Luca.
Well, certainly from our point of view, I mean, Luca will probably have a wider knowledge of all the resources that are there. But certainly from my point of view, I would recommend that any government or any law reform body looking at this issue to read Melita, read the explanatory material. And it might be that, don't be put off by the fact that obviously some of the language might not seem immediately compatible with your own jurisdiction, with your own legal system. It's a question of looking beneath that and identifying, as we have done across these jurisdictions, as I said, the common themes. And there's lots of that material in Melita, which one can then transpose mutatis mutandis onto individual jurisdictions. And we found all the way along that the organisation UNSTRA was incredibly helpful and facilitative and very generous with their time. I know that you get this from Luca, but everybody that I spoke to was equally passionate about this development and about this objective. And so that was really, really important to us, because if ever there was a part of it that we didn't really maybe understand what was behind it, or hadn't really managed to think out quite how that would pan out in terms of English law, then a discussion with the relevant parties was invaluable.
Great. And maybe before I move to Luca, there's actually one quick question, which is addressed to you. By when can we expect a modification in English law to allow digitalized trade documents? Do you have a time frame? Do you know?
It will be early. If that reforms, as I said, I can only make the reforms. They will be completed by the end of this year, which means that any adoption will be early 2022.
Okay, thanks. Luca, do you want to also address the question?
Well, first of all, I would like to thank Sarah for her kind words. It is a huge sign of appreciation to hear that this is useful for a country that is so important in the development of commercial law. We all know that English law is often the law of choice, and it's really useful to have this perspective of cooperation between different jurisdiction, and also between uniform law and national law. And I believe that in the coming months and years, we will see more regional organizations coming to support Melita, and it is important that also the legal interaction and the mutual legal recognition is preserved. I would also like to say, but Oswald, maybe he can join in soon. There will be dedicated web page or a mini website or something of the DSI, including a part on Melita. So I would like here to address the question: what is the number one obstacle, especially in developing countries? And this is really dear to me. Well, in my experience, it's not so difficult to pass a law. It's more difficult to implement it, to do the capacity building of the relevant actors, especially the judges. But the number one problem is the cultural change in the public sector. Wherever we discuss here these issues, especially coming from a paperless trade perspective, there is the need to persuade, say, customs that the electronic document is as reliable or more reliable than the paper document. It's not easy for a number of reasons. So to me, that's the problem. Of course, we have a lot of other problems of resources, financial, human, technical infrastructure, but everything can be overcome, and there's a lot of opportunities out there, actually, a lot. But the most difficult is this cultural change. And part of it has to do also with the fact that it's not enough to have excellent software engineers. One has to give a minimum level of digital awareness to all the people, so that everyone may get the benefit of this and may interact with this type of arrangement in a fruitful manner.
Now, thanks, Luca. Oswald, did you want to jump in very quickly? We don't have too much time left, but
I'll just briefly mention exactly what Luca just said. I think one of the key things we find is how do we empower the business community to also have this dialogue? And so we'll be launching in the next few days an actual online presence that actually enables both policymakers and executives to get a sense of how do we actually take this conversation forward, and how do we partner both private sector and government to actually make the changes happen.
Thanks a lot, Oswald. Now, there are many questions in the chat for you, Sarah, on the Militar. So I think the best, either you can answer in the chat, or maybe share your email and people can reach out to you, because we won't have time to address all of them now. So let's move on. And I wanted to go back to an issue that we discussed earlier today, which is the MISME financing and trade finance gaps, which are a reality that weigh very heavily on small businesses. And I know, Michael, that you're very active on that front, and you showed that very interesting slide in your opening remarks. So I wanted to ask you, what do we need to do to build a new and better trade finance ecosystem? So what does this all mean, these issues around interoperability for the trade finance ecosystem?
Yeah, thanks, Emmanuel. I think we're just beginning to understand how this digital transformation may lead to an increase in availability of finance for SMEs, but it's not as simple as it sort of sounds. And I think there's a number of areas that you kind of need to think about. And I thought the report that was issued today by yourself was great and sort of highlight a lot of these issues. But top of mind, I would say there's a couple. One is just enabling digital identity. I thought it was a great session last time. I agreed with Luca. I thought it was a great session on digital identity. But enabling MSMEs to have a digital identity and helping them to become digital first and figuring out how to present information to their financing partner, I think is going to be really, really critical. And that's sort of a first step. And then second is about actually what needs to be digitized in order for MSMEs to have greater access to finance. I mean, we're talking about trying to change the world and have everything digitized end to end. And it's a fantastic vision and a dream, and it will take time to get there. I think we talked about a roadmap. But it's important that that you understand what's actually required to start. So starting with purchase orders and invoices and digitizing those and making them available for financing and avoiding double financing. I think that was covered in a previous session as well. That's really, really critical to start that enablement process. And then the third area that I would sort of touch on is probably around regulation and policy that enables lending to smaller companies to become more profitable for banks. A lot of banks don't lend to small businesses because it's just unprofitable, either because they lose too much money, the capital models don't work, or it's too expensive to do it. So, figuring out how to make it more profitable to lend to this segment and increasing this huge liquidity pool that's available at a low cost, as in digital, and lower risk in terms of improving the credit modeling and understanding of risk, and essentially making it more efficient through changes in capital regulations or using smarter ways of using blended finance. I think at the moment, blended finance has a number of ways of operating. I think there's more imaginative things that can be done. And as some of these sort of digital basics kind of get put into place, the fourth is really going to be about improving the access of small businesses to alternative liquidity through capital markets, which is about transparency and risk understanding for those capital markets of the risks in this space, and enabling, I think I mentioned before, enabling how those small businesses, who basically, if you've got a shipment of goods to make, you need financing for that shipment of goods. You don't understand how to convert all the information that you've got, probably all in paper form at the moment, into a request for financing. So a lot of that stuff just gets turned down, and that's why we have a large gap. And I think the other point that's been made a few times is really around capacity building and education. How do we translate that information, and how do you educate SMEs in terms of all the different channels that are available? And I think that's going to require quite a lot of work as well. So I think those are the few that sort of come top of mind. There are a couple of others, but the main ones.
Yeah, thanks a lot, Michael. And clearly, the challenge of education is a big one. Oswald, I know the ICC recently issued various statements on this issue and launched a Save Our SMEs campaign in 2020. So do you have any views on this in a couple of minutes?
I do. I think one of the key things digitization can help, especially after what we've all been through over the last 12, 13 months, is actually to help bring liquidity to MSMEs. I think we're going to look back at this period, Emmanuel, as one of the more innovative periods of our time, where we've seen technology and business models coming together and finding new innovative ways of actually helping MSMEs. And I think, again, model laws like what Sarah and Luca is working with are just going to help create so many new business opportunities out there. As a part of my standards work, I have the privilege of meeting all of these great companies, and I have seen some amazing business models tied with technology actually already helping MSMEs. And I have to just end off by saying one of the things you would have seen John do a little bit earlier today is actually announce our Trade Now platform at the ICC. And this is exactly where we're going to try and help. How do we take these innovative blockchain-based companies that offer these new business models and actually tie them into the existing infrastructure of the world to help as many MSMEs as we possibly can. We're going to look back and see this as quite an innovative period when it comes to MSME financing one day.
Thanks a lot, Oswald. Now, we talked a lot about the regulatory framework and the law side. Now, there was a widely shared image that went around LinkedIn a few months ago, which stated, what is the biggest driver of digitalization, the CEO, the CFO, or COVID-19? Now, my question is, what about governments? What needs to be done to support digitalization? Can I turn to you, Sarah, since you work at the UK Law Commission? What role for government?
So what's the question, sorry? What is the biggest driver, or what should?
What's the role of governments to support trade digitalization?
Yeah, I mean, I think it's a sort of roundup of what everybody today has already mentioned. And I mean, I know I would say this because I'm the Law Commissioner for Commercial Law, but I think without the legal infrastructure, it was one of the things Par mentioned at the start. I mean, everybody's referred to it. And I think without that, I mean, my instinctive response is to say that it's the users that are driving this, but that the resources are simply not going to be invested to an optimal amount if we don't have legal certainty. I mean, why would you do it? Whether you're a CFO or a CEO, it's not in your interest to do it if it's not going to have, if your legitimate expectations are not going to be protected by the law. So it's probably a biased view from me, but I very, very much believe that without the legal infrastructure, the rest of it won't follow.
Now, Pam, can I maybe ask you, because I mean, you're a big company, you're very active in the blockchain space. What do you at IBM see as the biggest impediment when it comes to scaling up the very solutions you've developed? And how can governments or international organizations like the WTO support trade digitalization developments?
So two things in response there, Emmanuel. So first of all, digitization is happening. If we take that into two steps, what's happening within an institution and what's happening outside the institution. Inside the institution, you have got onboarding processes, you've got KYC processes, invoices, POs being issued, as Michael highlighted, and the e-bill of lading being exchanged. Those workflows are being digitized, and you've got artificial intelligence, machine learning, OCR, scanning of documents, and data doesn't have to be in the exact field to be seen as it goes through that workflow. So that digitization is happening, and it's going well, and it's really just digitizing what's happening today. So it's cheaper, faster, but you still have that document that needs to be reconciled as you go through each part of the workflow when you have a look at trade actors. So that's going well, and that part of digitization is progressing, but not progressing fast enough. What COVID highlighted and accentuated was the fact that you still had goods stuck in customs. You still had goods stuck in ports. And as the gentleman mentioned earlier, just think about, I think it was Luca who mentioned how many documents are going to now have to be changed. So the digitizing is one, but digitizing with trust when you go outside of your four walls is the focus area, because that's where the real efficiency cost takeout is to be gained. And that's where you can get better digitization happening. And that's where, from the impediments that we're seeing, is this, we have a framework called BOLT, business, ops, legal, technology. Business, literally, we are seeing the C-suite and the board being a lot more aware that current business models, and Oswald mentioned this as well, is just not sustainable. Going after market share alone is now not enough, especially with the environment and stakeholders and the SDGs. So we're now seeing a shift where the C-suite is saying we have to be working smarter together, and that means sharing data in a much more of a trusted way, and that's where blockchain really comes in. So we're seeing that being one impediment that's being overcome slowly, the business sponsor. Operationally, sharing this data, making sure it's always shareable as an infrastructure, as technology, that's there. You've got your 4, 5, 9s from an infrastructure point of view with cloud infrastructure services and everything else. Technology-wise, this is one area where companies are still making mistakes, and that is they do the happy flow of a transaction using blockchain as a digitized, but they forget the non-functional, all of those things about controls, about business continuity, disaster recovery, data residency, protection, privacy. That's where they fall, and that's where certainly institutions talking to regulators sooner is a good thing. But then it's legal. What should be kept in a country or in a company, and how then it is transmittable with digital contracts, with Melita coming through, as Luca has called her now. That's certainly where legal plays a role, and the legislation changes that Sarah highlighted do make sense. However, can we wait? That's the UK. What about the rest of the world? And in the absence of the countries catching up and aligning, what do we do? And that's where we're beginning to see this notion of a neutral venue. A plethora of existing standards are out there, and using a rule book in the meantime while the world catches up on an equal footing. So they're the kind of things that we're seeing that then will impede or needs overcoming to be successful, to digitize with trust, not just digitize alone.
And to digitize with trust, indeed. Now, I think we all agree about the importance of trade digitalization and the need to accelerate digitalization efforts. Now, let's look at the flip side of the coin, the consequences of the do nothing action. What would it be? Tom, do you want to go first? And then I'll ask each of the panelists for 1 minute answer, the consequences of do nothing action. Tom?
Oh, sorry, was that me? Oh, right, sorry.
Yeah.
I was shuffling my paper. So yeah, the scenario of do nothing. If everything goes forward with digital identity, we've heard it mentioned, KYC, provenance, IoT, smart contracts, and digital currency kicking in, it's more than just digitizing trade. And that's where my fear is that we're going to get good digitization or bad digitization happening. Good digitization is it's inclusive, it's carbon neutral, it's equitable, it's open on data and privacy and residency, and everybody can collaborate. Bad digitization, you're going to have your digital islands, and those digital islands are going to come from geopolitical drivers, and then you're going to have closed and the negotiation is not going to be on quotas and tariffs, it's going to be an API strategy and who gets to move which data where. You get that stage, then the biggest danger is of doing nothing is you're going to get asymmetry on data, digital assets, and I've seen it on some of the chat as well, is on the token economy that will come when trade is digitized. So if we do nothing, it's going to be a race to the bottom, and now's the time to act in a good digitization way.
Thanks. Michael, do you want to share your thoughts on that? On the do nothing?
Yeah, look, I think one of the panelists in the first session talked about necessity. And I couldn't agree more with that. I mean, to remain competitive, whether you're whether you're running a country and you're a government, or whether you're leading a multinational, whether you're an SME, you need to digitize. There's actually no choice. If you do, for those that do it well, and I agree with Palm, there's going to be those that don't do it well. But for those that do it well, they're going to win. They're going to win market share. They're going to grow their GDP. They're going to increase the number of jobs in the economy. And those that don't will have the opposite happen. And we'll see the trade financing gap for MSMEs increase. So I think there is no choice. The COVID-19 has become an imperative. A lot of companies had already appointed chief digital officers probably a couple of years ago. I would say sort of 2016, 2017, it was kind of a trend to appoint someone to kind of figure out how to kind of make the fourth industrial revolution happen in the company. Countries need to do the same thing. Someone needs to be responsible and accountable for making it happen.
Great, thanks. Sarah?
Well, I agree with what Michael and Palm have said very much so in terms of the commercial and the practical side of things. The lawyer's perspective is, well, I think it would be a very bad thing not to grasp the nettle now, because what will happen is, which has already happened to some extent, commercial parties are not going to wait. If they want to do something, they're not going to wait until the law gives them the easiest path. What they will do, and what they're already doing, is they will find a way around it. They will try and achieve something that broadly equates to what they want to do, but it will be done in an inefficient way because they don't have any choice. And it'll be done in a piecemeal way, and it means particularly in a common law jurisdiction like England and Wales, which is Michael's already mentioned is a choice of law for a lot of these transactions, it will develop in a haphazard way. So it will be inefficient. It's just far from optimal. It makes far more sense for us all as jurisdictions to think about it now, to look at it in a way which is still to some extent speculative in terms of the technology. And so set out for people what they need to achieve so they can see the easiest way through and a path through. Otherwise, they will use their ingenuity and they will get there, but it will just be in a way which is clunky, and which I just think is unnecessary, really. There's no reason, in my view, not to do it now.
Thanks. We only have 4 minutes left. Luca, Oswald, do you want to jump in on the consequences of the no to action?
Luca?
Nothing action, yeah. Luca first. Luca?
I think that we have to be very practical here. Everyone is saying that this is going to happen anyway. So whether we are talking about a country or we are talking about a company, the consequence of not being actively involved in this means not only to miss out on the benefits, but in practice, it means to get stuck in data silos. That's my number one fear. We are seeing, because this is the implementation of the approach of 20 or 30 years ago, we're seeing a proliferation of data silos, which are extremely difficult to break. So I think it's really important to understand the actual danger. This is an immediate and actual serious danger.
And just to build on that, I can't agree more with what everyone else has said. Companies and countries all compete to some degree. We've been digitizing now for over 2 decades. DCSA released a stat 0.5% last year, December, and that's after a global pandemic's hit us. And the reality is some countries and some companies will digitize quicker and better than others. And to Palm's point, this will provide competitive advantages. And the world that I want to live in is where we liberate companies and countries where they can actually use digitization to enable all those great UN sustainability goals. But if certain companies or countries don't adopt that, I think it's very clear what will follow.
Okay, thanks. So the consequence of the do nothing action, race to the bottom, being left behind for some, being stuck in data silos. So, but let's finish on a positive note and a call to action. So what do we need to do to avoid having the same discussion in 5 years' time? Who wants to go first?
UNCITRAL, MLETR, please, people. I'm done.
Okay, Oswald, UNCITRAL, MLETR. Luca?
Listen to what Oswald is saying.
Okay. Now, Michael, something different maybe?
Definitely start with it. Definitely start with Melita. But look, I think it's about having a plan, making someone responsible, ticking off each milestone, and tackling real problems. I mean, if you've got a real problem in a company, don't just go and digitize and try the technology. And last but not least, you know, this problem in trade is a classic lean manufacturing problem. So anyone who's read the Toyota Way or any lean manufacturing experience or Six Sigma work, it's a classic problem. If you digitize in a silo, it doesn't affect the end-to-end process. You've got to digitize and lean and to have a lean process end-to-end. Fix the process first. Innovation before capital, before applying the capital.
Thanks, Michael. Ron, closing word?
Closing word, I would say that digitization is going to happen. We've seen that people will connect and will have to connect. So by design, build that into your planning for execution when looking at the technology, the business, and the governance. So build it in by design. And as Sarah said, otherwise it's going to be clunky. So just build and be ready by design.
Thanks. And Sarah?
I think be audacious. I mean, this might be an experience as most people talk to lawyers, and lawyers are certainly English lawyers are famously conservative, and this feels in some ways like a huge leap. But we are essentially in our reforms reforming in part a statute that dates from 1882. So I don't think we're being particularly rash in making a leap to recognising digitised documents. So I think don't be afraid to be audacious when it's necessary.
Thanks. And we have an attendee who shared with us his call to action. So I will read it. Standards, interoperability, collaboration, including co-petition. So I think it's a nice way to wrap up the discussion. Now, so a big thank you to our fantastic panelists throughout the day for their very interesting and useful insights, and a big thank you as well to all the participants in this event for their active participation and engagement, and of course to our interpreters. So I hope that today's event has helped to demystify blockchain and distributed ledger technology, has shown the importance of trade digitalization and of what needs to be done to make trade more efficient and more inclusive. So it now depends on all of us to make it happen. And I hope that this event will help to catalyze action to the benefit of everyone, including the smallest players from developing countries. So thank you very much for your attention. And I'm now closing the Global Trade and Blockchain Forum 2021. Thank you. Bye.